Thank you for joining us on behalf of myself, Jim Nussle, and the Committee on the Responsible Federal Budget. Our co-chairs, Bill Frenzel, Tim Penny, and Charlie Stenholm, and the entire bipartisan board of our committee. I want to thank you for coming and welcome you to the committee's annual conference. I want to thank and recognize our president, Maya McGinnis, and her entire team of the committee for their hard work in putting together this conference and for their tireless work throughout the year. Our reputation as a committee in very large measure is because of Maya and her strong team, and she deserves a lot of credit for this conference. Thank you, Maya. As you can see, we have a tremendous group around this table and an overflow audience, it appears, of our nation's leading budget experts. We have a terrific moderator with Steve Leisman, who I'm honored to work with from time to time at CNBC. The attendance online and for this conference reflects the tremendous rise and, of course, this issue and the challenges on our national agenda and why it's so important for us today to gather and consider solutions. For 30 years now, the Committee on a Responsible Federal Budget has occupied a unique perch, bringing together policymakers and fiscal experts to instruct and assist the policy process in Washington. Our mission is to be bipartisan, a nonprofit organization committed to educating the public about issues that have significant fiscal policy impact. The committee is made up of some of the nation's leading budget experts, many of the past chairmen and staff directors of budget committees in the House and Senate, the Congressional Budget Office, the Office of Management and Budget, the Government Accountability Office, and even the Federal Reserve. Our board sets a tone for bipartisanship, respect among peers, mutual policy accountability, and we hope we can inspire some of that much-needed behavior to be modeled across the street on Capitol Hill. A participant said to me on the way in, with all of these budget geeks in one room, I'm sure that the solutions will be obvious. I have to tell you, the solutions tend to be obvious. That's not what really is the challenge most likely here today. The real challenge may be to inspire the courage of our policymakers to take those obvious solutions and make them real. And it will require moving from who's at fault to who is willing to lead and be responsible. So may we stipulate at the outset that Republicans believe that Democrats are at fault and Democrats believe that Republicans are at fault, and that both sides are probably correct. At least that's how we roll at the Committee for a Responsible Federal Budget, because we believe we've accomplished good recommendations with that premise. We're quite proud of the many projects led by our committee. Allow me to briefly highlight a few. We have the tools on our website it's www.crfb.org. Among them include U.S. Budget Watch. We'll be tracking the candidates' positions in the upcoming election. The committee also hosts the Peterson-Pugh Commission on Budget Reform, where we've developed a suite of budget targets and triggers that are at the centerpiece right now of many of the solutions being discussed regarding the budget and debt ceiling increase. We have a fiscal toolbox at budgetreform.org. And our online groundbreaking project, the exercise of hard choices, where participants are challenged to stabilize the debt at our debt simulator, which is an online game that I can tell already many of you have tried to go on and get the high score. Keep trying. We have to stabilize that debt, and it's a way for you to play at home while the policymakers fool around out here. And finally, the Moment of Truth Project, which we just unveiled this week. The Moment of Truth Project is using the work of the President's Fiscal Commission, Bowles Simpson, to track the progress on Capitol Hill of those policies that were recommended while instructing the national discussion on fiscal reforms that are proposed. Without any further ado, it's now my pleasure to introduce our keynote speaker for this conference. Chairman of the Federal Reserve accepts very few, if any, public speaking engagements in the run-up to a meeting of the Fed. It's a testament to the seriousness with which he takes these timely issues and the mutual respect between friends, colleagues, and former associates like myself that he has agreed to join us today. Ladies and gentlemen, the Chairman of the Board of the Federal Reserve, Ben Bernanke.
Thank you. Good afternoon. What an impressive group of talent we have around the table here. I'm very pleased to speak to a group with such a distinguished record of identifying critical issues related to the federal budget and working towards bipartisan solutions to our nation's problems. Today, I'd like to briefly discuss, to set up the meeting, the fiscal challenges the nation faces, the importance of meeting those challenges, and how it affects our collective economic future. And then I'd like to conclude with a few thoughts on the way forward. At about 9% of the gross domestic product, the federal budget deficit has widened appreciably since the onset of the recession in December 2007. The exceptional increase in the deficit has mostly reflected the automatic cyclical response of revenues and spending to a weak economy, as well as the fiscal actions taken to ease the recession and aid the recovery. As the economy continues to expand and stimulus policies are phased out, the budget deficit should narrow over the next few years. Unfortunately, even after economic conditions have returned to normal, the nation faces a sizable structural budget gap. Both the Congressional Budget Office and the Committee for a Responsible Federal Budget project that the budget deficit will be almost 5% of GDP in fiscal year 2015, assuming that current budget policies are extended and the economy is at that point close to full employment. Of even greater concern, though, is the longer-run projections that extrapolate current policies and make plausible assumptions about the future evolution of the economy, which show the structural budget gap increasing significantly further over time. For example, under the alternative fiscal scenario developed by the CBO, which assumes most current policies are extended, the deficit is projected to be about 6.5% of GDP in 2020 and almost 13% of GDP in 2030. The ratio of outstanding federal debt to GDP, expected to be about 69% at the end of this fiscal year, would under that scenario rise to 87% in 2020 and 146% in 2030. One reason the debt is projected to increase so quickly is that the larger the debt outstanding, the greater the budgetary cost of making the required interest payments. This dynamic is clearly unsustainable. The nation's long-term fiscal imbalances did not emerge overnight. To a significant extent, they are the result of an aging population and fast-rising healthcare costs, both of which have been predicted for decades. The CBO projects that net federal outlays for healthcare entitlements, which were 5% of GDP in 2010, could rise to more than 8% of GDP in 2030. Even though projected fiscal imbalances associated with the Social Security system are smaller than those for federal health programs, they too are significant. Although we've been warned about such developments for many years, the difference is that today those projections are becoming reality. A large and increasing level of government debt relative to national income risks serious economic consequences. Over the longer term, rising federal debt crowds out private capital formation and thus reduces productivity growth. To the extent that increasing debt is financed by borrowing from abroad, a growing share of our future income would be devoted to interest payments on foreign-held debt. Hello? Any better? Good. Good. High levels of debt also impair the ability of policymakers to respond effectively to future economic shocks and other adverse events. Even the prospect of unsustainable deficits has costs, including an increased possibility of a sudden fiscal crisis. Hello? As we've seen in a number of countries recently, interest rates can soar quickly if investors lose confidence in the ability of a government to manage its fiscal policy. Although historical experience and economic theory do not show the exact threshold at which the perceived risks associated with the U.S. public debt would increase markedly, we can be sure that, without corrective action, our fiscal trajectory is moving us ever closer to that point. Perhaps the most important thing for people to understand about the federal budget is that maintaining the status quo is not an option. Creditors will not lend to a government whose debt relative to national income is rising without limit. So one way or the other, fiscal adjustments sufficient to stabilize the federal budget will occur at some point. These adjustments could take place through a careful and deliberative process that weighs priorities and gives individuals and firms adequate time to adjust to changes in government programs and tax policies. Or the needed fiscal adjustments could come as a rapid and much more painful response to a looming or actual fiscal crisis in an environment of rising interest rates, collapsing confidence in asset values, and a slowing economy. The choice is ours to make. The primary long-term goal for federal budget policy must be achieving fiscal sustainability. A straightforward way to define fiscal sustainability is as a situation in which the ratio of federal debt to national income is stable or moving down over the longer term. This goal can be attained by bringing spending, excluding interest payments, roughly in line with revenues, or in other words, by approximately balancing the primary budget. Given the sharp run-up in debt over the past few years, it would be reasonable to plan for a period of primary budget surpluses, which would serve eventually to bring the ratio of debt to national income back down towards pre-recession levels. Fiscal sustainability is a long-run concept. Achieving fiscal sustainability, therefore, requires a long-run plan, one that reduces deficits over an extended period and that to the fullest extent possible is credible, practical, and enforceable. In current circumstances, an advantage of taking a longer-term perspective in forming concrete plans for fiscal consolidation is that policymakers can avoid a sudden fiscal contraction that might put the still fragile recovery at risk. At the same time, acting now to put in place a credible plan for reducing future deficits will not only enhance economic performance in the long run, but could also yield near-term benefits by leading to lower long-term interest rates and increased consumer and business confidence. While it is crucial to have a federal budget that is sustainable, our fiscal policies should also reflect the nation's priorities by providing the conditions to support ongoing gains in living standards and by striving to be fair to both current and future generations. In addressing our long-term fiscal challenges, we should reform the government's tax policies and spending priorities so that they not only reduce the deficit, but also enhance the long-term growth potential of our economy. For example, by increasing incentives to work and to save, by encouraging investment in the skills of our workforce, by stimulating private capital formation, by promoting research and development, and by providing necessary public infrastructure. We cannot reasonably expect to grow our way out of our fiscal imbalances, but a more productive economy will ease the trade-offs that we face. It's easy to call for sustainable fiscal policies, but much harder to deliver them. The issues are not simply technical. They are also closely tied to our values and our priorities as a nation. It is little wonder that the debates have been so intense and progress so difficult to achieve. Recently, negotiations over our long-run fiscal policies have become tied to the issue of raising the statutory limit for federal debt. I fully understand the desire to use the debt limit to force some necessary and difficult fiscal policy adjustments, but the debt limit is the wrong tool for that important job. Failing to raise the debt ceiling in a timely way would be self-defeating if the objective is to chart a course toward a better fiscal situation for our nation. The current level of the debt and near-term borrowing needs reflect spending and revenue choices that have already been approved by the current and previous Congress and administration of both political parties. Failing to raise the debt limit would require the federal government to delay or renege on payments for obligations already entered into. In particular, even a short suspension of payments on principal or interest on the Treasury's debt obligations would cause severe disruptions in financial markets and the payment system, induce rating downgrades of U.S. government debt, create fundamental doubts about the creditworthiness of the United States, and damage the special role of the dollar and of Treasury securities in global markets in the longer term. Interest rates would likely rise, slowing the recovery and perversely worsening the deficit problem by increasing required interest payments on the debt for what might well be a protracted period. Some have suggested that payments by the Treasury could be prioritized to meet principal and interest payments on debt outstanding and thus avoiding a technical default on federal debt. However, even if that were the case, given the current size of the deficit and the uneven time pattern of government receipts and payments, the Treasury would soon find it necessary to prioritize among and withhold critical disbursements such as Social Security and Medicare payments and funds for the military. Moreover, while debt-related payments might be met in this scenario, the fact that many other government payments would be delayed could still create serious concerns about the safety of Treasury securities among financial market participants. The Hippocratic Oath holds that first, we should do no harm. In debating critical fiscal issues, we should avoid unnecessary actions or threats that risk shaking the confidence of investors in the ability and the willingness of the U.S. government to pay its bills. In raising this concern, I am by no means recommending delay or inaction in addressing the nation's long-term fiscal challenges. Quite the opposite. I urge the Congress and the administration to work in good faith to quickly develop and implement a credible plan to achieve long-term sustainability. I hope, though, that such a plan can be achieved in the near term without resorting to brinksmanship or actions that would cast doubt on the creditworthiness of the United States. What would such a plan look like? Clear metrics are important, together with triggers or other mechanisms to establish the credibility of the plan. For example, policymakers could commit to enacting in the near term a clear and specific plan for stabilizing the ratio of debt to GDP within the next few years, and then subsequently setting that ratio on a downward path. Indeed, such a trajectory for the ratio of debt to GDP is comparable to the one proposed by the National Commission on Fiscal Responsibility and Reform. To make the framework more explicit, the President and congressional leadership could agree on a definite timetable for reaching decisions about both shorter-term budget adjustments and longer-term changes. Fiscal policymakers could look now to find substantial savings in the 10-year budget window, enforced by well-designed budget rules, while simultaneously undertaking additional reforms to address the long-term sustainability of entitlement programs. Such a framework could include a commitment to make a down payment on fiscal consolidation by enacting legislation to reduce the structural deficit over the next several years. The task of developing and implementing sustainable fiscal policies is daunting, and it will involve many agonizing decisions and difficult trade-offs. But meeting this challenge in a timely manner is crucial for our nation. History makes clear that failure to put our fiscal house in order will erode the vitality of our economy, reduce the standard of living in the United States, and increase the risk of economic and financial instability. Thank you very much.
Okay, thank you so much. We are deeply, deeply grateful for Chairman Bernanke attending our conference and setting us off on such a somber note. I think we know differently. I'm quickly going to turn over moderating this event to Steve Leisman, who is going to run this with a number of opening remarks and then bring in everybody from our panel. I just want to lend my thanks, along with our chairman, Chairman Nussle, and Chairman Bill Frenzel, to the entire group who is joining us today. We have truly an all-star cast who is here at the table and who is kicking off with opening remarks today. And I think it goes to of the issue of fiscal policy and how it has risen to the top of the national agenda, and I think will probably be there for quite some time. So I'm looking forward to the discussion today. Thank you so much for all of you joining us today. On to Steve and then Congressman Paul Ryan.
Maya, thank you for pulling this together. Someday you'll share with me the magic that you have, that when you say jump, all the people around this table say how high. But you do a marvelous job of bringing people together. It's testament to you and your organization that everybody says yes, and I gather says yes so quickly. We have a lot There's an incredible amount of brain power in the room. We're going to lock the doors and not open them until we have a solution. That's the agreement, I guess, that all of you have signed up for here. There's plenty of coffee, right, Maya, and plenty of cookies, and nobody moves until there's a deal. And I hope you brought a change of underwear. My mission here is to make as much use of this brain power as possible. Me at times to be perhaps a little more forward with people with whom I respect. I will apologize in advance for that. I want to read one quote before I turn it over to Congressman Ryan. And forgive me if everybody has read this 100 times, but I think it's so good it's worth repeating. It's from the Simpson Bowles report. It says, "The problem is real. There is no easy way out. Everything must be on the table, and Washington must lead." Congressman Ryan, why don't you lead us?
Okay, you want me to take this one over here?
This one's lousy.
Yeah. And the one with the red tape isn't working. You want me to do that? Oh, there you go, Steve.
Yeah, I'll take this one out.
Yeah, here, take this one. Hello, everybody. I think I know everybody around the room here, so it's nice to be back with you. Maya, thanks for doing this. You're doing a great service. Okay, I'll just give you, what, a couple minutes?
Yeah, we're going to try to do 3 to 5 minute
Okay.
opening statements.
All right, so opening statements. We took over the majority this session. We took over the majority on the cusp of a debt crisis. We all know around here the size of the problem, the scope of the problem, the magnitude of the problem, and so we believed that we had a moral obligation to put a solution on the table. And that's precisely what we did in the House of Representatives. To govern is to actually put an idea on the table and move solutions. That's what we did. Note that last year, Congress didn't bother trying to pass a budget. First time since the 1974 Budget Act, the House never even tried to pass a budget last year. This year, it's now 775 days since the Senate has passed their last budget. You can't solve a budget crisis if you don't bother to pass a budget. So in the House, we're taking our situation, our responsibility seriously. We passed our budget by the statutory due date, April 15th. And I'll give you a quick summary of what it does. On the net baseline, relative to the president's budget, it reduces spending by $6.2 trillion over 10 years, $5.8 trillion off the CBO baseline. There are basically 4 things we try to achieve with this budget. Number 1, economic growth. Do the kinds of policies that are important to get the economy growing, not unlike the kinds of things that Chairman Bernanke was just talking about. Pro-growth tax reform, where taking a page out of the Fiscal Commission, which I was able to serve on with Alan and Andy and others, broaden the tax base, lower tax rates on a revenue-neutral basis to get a more internationally competitive tax code so we can have growth and prosperity. Other things we did for pro-growth, energy and other sectors. But number 2, we have a social safety net that is very, very important. We believe we need to have a safety net to help people who can't help themselves or who are down on their luck. Problem is our safety net is going insolvent. It's tearing at the seams. So we need to repair the rifts or the rips in the social safety net. And we want to have a welfare system that is geared not toward keeping people on welfare, but getting people back onto their feet on the lives of self-sufficiency. That's why we have career scholarships. That's why we consolidate job training. That's why we reform with state innovation, block granting things like Medicaid, food stamps. Number 3, it's our health care entitlements that are the leading driver of our debt in the future. You have to address that. It's unmistakable. No matter what kind of TV commercials, no matter what kind of demagoguery political campaigns will throw at you, you can't escape mathematics. And so we put out a serious plan to try and address this problem. It's a plan that has ideas that originate from both political parties. It's a plan that saves Medicare. Medicare is going bankrupt. Whether you look at CBO in 9 years or the trustees in 2024, the fact is the program's unsustainable as it's currently designed. We think the best way to go after this is to keep the promise to people who are in and near retirement and reform it for subsequent generations. We think premium support's a smart way to do it. Because with premium support, you get a list of guaranteed Medicare coverage options. It's not something where you go out on the market on your own and pick your own plan. And you means test it. More support for the poor, more support for the sick and middle income than you give for wealthy people. We think that's a smart way to go. Not only that, CBO tells us it brings solvency to the program. The 4th thing we do that we think is very, very important is we put in place a plan to pay off the national debt. Not only do we show that under our budget, the debt peaks at 74.5% of GDP in 2 years, then it goes down from there on after, to the point where in the out years we get paid off. But more importantly, we put lots of budget reforms in our budget we propose, whether it's statutory caps on discretionary spending, whether it's total caps on all spending, whether it's debt caps, like debt triggers, where we keep debt as a percent of GDP locked down and enforced with sequesters. I know I'm getting a little technical, but this is the kind of group to do that in. So we believe in the belt suspenders approach. Budget cuts, budget reforms, spending controls, and economic growth. You can't fix this if you don't have growth. The U6 unemployment rate's at 15.8%. Unemployment just went up to 9.1%. People have been out of work for long over a year. You can't fix this country's fiscal problems if you don't get people back to work. So economic growth and prosperity, along with spending control, is the secret to our plan. We understand not everybody agrees with this. That's fine. We expected that. What we were hoping to do was ignite a conversation, a debate, get to the we've been losing the chance at an adult level of conversation. We are hoping to get that adult stage of conversation, the kind of conversation that Alan Simpson has done a great job of contributing to. Unfortunately, that's not where we are. Unfortunately, our partners on the other side of the rotunda in the Senate have chosen not to do a budget. We've put our plan out there, but the budget process is done. And that is why the debt limit is the only other train in the station leaving to get any kind of fiscal controls getting out of Congress. And that is why you have these talks revolving around the debt limit. And I'll just leave it at that.
Great, thank you. You know, I'll come back to you, Congressman Ryan, but I got a full disclosure here. I was born 1963. Last year of the baby boom, not a single one of your guys' plans grandfathers me in. Okay, not your plan, nobody's plan.
We can write Steve Leisman in the
Yeah, you can do that. They do that with all the other, okay. Senator Bennett, thank you.
How are you? Thanks today.
Sure.
Well, thank you for having me. I was born in 1964, which I always claimed as being the last year of the baby boom generation for 2 years on the campaign trail, so now I've been corrected. It's wonderful to be with all of you, and with Congressman Ryan, I want to also especially say thank you to Al Simpson for the incredible work and the incredible leadership that he has shown. I wish he were still in the United States Senate, but he's not. And I might start where Congressman Ryan ended, which is the need for a thoughtful conversation about all of this, because I'm mystified by the conversation that's going on in Washington. Mystified. Somebody who hasn't spent their life in politics, half my career in the business, in business, and half in at the local level of government. No constituent of mine at the local level would ever tolerate the conversation that we're having in Washington. You know, when it came to the government shutdown question, and at least by my math, the bid and the ask spread between the two sides in the last couple of weeks represented roughly 4 cents on the $20 meal at Applebee's that you might have for dinner. It represented $27,000 of the operating budget of the city of Alamosa in my state. And the idea that the mayor in my state would go to his constituents and say, we can't agree on $27,000, so therefore we are closing the government down, would be laughable. The conversation around the debt ceiling, I feel, is the same. What we need to have is a comprehensive discussion about how to put this fiscal house in order, and we need to do it quickly. And I think this is a test, not just of our ability to do that, but an epic test of whether the institutions in Washington are actually capable of working. And that's what the people in my state wonder, because they have a fairly simple test here. You know, Colorado is a third Republican, a third Democratic, and a third Independent. And I'm actually crystal clear, I think, on what people want. They want a plan that materially addresses the problem. They know it can't be solved overnight, and they'd like to see an approach to taxation and regulation that drives innovation and growth in our economy. They want to know that we're all in it together. So this Washington language that's pitting one group against another group is of no interest. They want to know that we all have something to contribute to solving the problem. And they want it emphatically to be bipartisan, because they don't believe in the answer that's coming from either side. And I would add a corollary to that, just a fourth corollary, which is we need to know that the capital markets, as our Fed chairman was discussing, would be satisfied that the paper that they bought is worth what they paid for it. If I could go home to my town halls and say we've met those 4 tests, I think that people would then be willing to talk about all the other things that we need to do in this country, like create an energy policy, like educate our kids for the 21st century, and on and on and on. But as long as this deal point is on the table, what they're going to be saying to us is what I used to say when I was in business and I didn't like a deal point that was on the table, which is, I can't hear you. I can't hear you on all this other stuff you're talking about. In my humble opinion, the work that the Debt and Deficit Commission did was an excellent start to what we ought to do, and we ought to find a way for Democrats and Republicans in both houses to come together around something that meets the 4 tests that I could then share with the people in my state who are desperate for us to fix this problem. Thank you for having me. Maya, thank you for all of your work pulling this together.
Thank you, Senator. And now we'll ask the Honorable Alan Simpson for some remarks.
I was born in 1931. Wisdom unalloyed. Oh, yes. Thank you, Mike. Yes, I was saying I was born in 1931. I hope you'll remember a suitable commemoration on September 2nd. It would be. These are good things. Erskine and I have been in the witness protection program, and these sporadic events are inspiring to us to come out. We'll be both here. It was such a thrill in January of 2010 when my old friend Joe Biden called and said, "I have a good deal for you, Al." Chairman, co-chair of the National Commission. I said, "Who's the other co-chair?" He said, "Erskine Bowles." I said, "Boy, couldn't pick a better guy." First call I got was from Bob Dole and Elizabeth Dole saying, "This is one of the finest men we've ever worked with." And he is. He's a prince, a rare gem. I trust and admire him greatly. He is the numbers guy, and I do the color. There will be sharpshooters. They're out in the land. They say, now, you mentioned 21% GDP and historically and so on, they get a PowerPoint. And I say, I had a mortar platoon in the Army, and I didn't hear that question. Erskine, if you could take that, I'd appreciate it. Therefore, I get the heat off of me. When you laughing about Jones, you heard me do this before. Now, I just say, when we started this, we said, we're doing this for 15 reasons. He has 9, and usually they say, why are you doing this, which means at this age. But what we said was we have 15 reasons. He has 9 grandchildren, I have 6. First, we thought we were doing it for our grandchildren. Deeper we got, we found out we were doing it for our children, and now we found out we're doing it for everybody in this room. That's where this baby is. This is a stink bomb in the garden party. It doesn't matter what part of it they're going to use, or whether my name is connected with it, I don't give a whit. But I'll tell you, the essence of what we did, we have felt that we have achieved an astounding success. We have effectively pissed off everybody in America. And that's an important thing at 80, to be able to do that. It was good at 17 when I did it. But let me tell you, when Erskine and I go around this country, we can sit in front of any audience, and for 50 minutes and taking questions, we'll get a standing ovation, because we don't shovel mush at them. Andy sat through all this, and Paul, it took us 3 months to establish trust in this commission. Never seen more dysfunctional, hostile environment. Democrats against Republicans, and Andy worked with Coburn on the defense proposals in our plan. But I tell you, when you get out in real life, anywhere in the country, and you say, here's where we are. If you spend more than you earn, you lose your butt. And if you spend $1 and borrow 41 cents, you got to be stupid. And I use the word stupid, because that's what's happening. It was 40 cents just a few months ago. Now it's 41 cents. Social Security, we're not trying to balance the budget on the backs of poor old senior citizens. Somebody ought to tear up your AARP card. Those people are just marketers. Now, I'll tell you why. The Social Security system, if you do nothing, if we did nothing, was to be at the year 2037 would pay out 22% of its payment less. In a year, that's changed now. In the year 2036, they've moved it up, and you get 23% less in a year. Not bad. Totally unsustainable, totally unconscionable. I don't think we won't get it done by the pressure of the debt limit. The very people who will be hurt the most are the little guy, the one that everybody always talks about in this town. How about the little guy? Well, you know, when interest goes to 4% and inflation kicks in. So I just say it's been a fascinating thing, but I'll tell you, Lincoln used a word, it was called enthrall. Look up the word thrall. It's almost like bondage of your mind. And if the American public and the Congress remain in thrall to Grover Norquist and the AARP, you haven't got a prayer. It's almost like bondage of your mind. And if the American public and the Congress remain in thrall to Grover Norquist and the AARP, you haven't got a prayer.
Thank you, Senator Simpson. And I guess it is now tradition here that before you speak, you'll give the year you were born. And your claim on the
benign
entitlement.
curmudgeon.
We're going to get to Larry Lindsay, who's going to give us opening remarks in just a second. But Larry, moderator's prerogative here, unscheduled segment. Congressman Ryan, 2 minutes. Give us one thing you could get from the Democrats that would bring you to the table to compromise, and then 2 minutes to Senator Bennett.
I won't take 2 minutes. Look, Alice Rivlin and I made a crack at this. They called it the Rivlin-Ryan plan in the commission, which was a plan to save Medicaid and Medicare, the biggest drivers of the debt in the future. We thought that had that been included in the fiscal commission plan, that would have been a substantial improvement. You can't fix this problem. You just can't fix this problem if you don't deal with our health care entitlements. And not dealing with our health care entitlements means you're not fixing the problem. And so if you fix the health care entitlements, I think that's a huge step in the right direction that brings people like me along.
Bar is high. It took less than 2 minutes.
I'll do it in less than 1 minute. I agree that we need to fix our entitlements, and that health care is a central question here. And having spent the last 2 years surviving a political campaign where I was being accused of having cut $500 billion of health care, I know what that's like, and we do need to move beyond that into a world where we really are having a rational conversation about it. I think my own view is that the folks in my town halls would think well of the balance that the Debt and Deficit Commission struck around revenue and the cuts that were made to discretionary entitlements and the interest savings. So it was roughly 3 to 1, as you'll recall, and I'd like to see a plan that reflected that.
3 to 1, you in?
Let's see the package.
Okay. Larry?
That's promising.
All right. A little progress. Larry, the market has to watch all this and has to take it all in. It's been down. Is some of that to do with what's been going on with the debt ceiling?
Steve, I think that's certainly going to be true. I'm going to say today that I think we're dealing with numbers that are a little bit too optimistic.
My light's on. Oh, pull it closer? Sure. I'm in the private sector because I said with my back-of-the-envelope calculations that a major cost element that was about to hit us was underestimated by official estimates. And I'm about to give you 3 that I think are underestimated right now. The first has to do with interest rates and interest rate normalization. Right now, Uncle Sam borrows at an average cost of 2.5%, lowest in history. A normalized interest rate, that is the average, say, of the last 20 years, low inflation period, is 5.7%. Can we normalize rates? Well, if we normalize rates in 2013, which I would say if we don't do it, the markets may force us to, would add around $400 billion in extra interest costs. Now, the Congress just struggled to find $37 billion in cuts in March. And here we're talking about just a normalization of rates costing 10 times as much of that. Now, I'm actually worried about this less than other things I'm about to discuss, because I can tell you how we're going to fix it. The Fed is not going to let interest rates normalize. Now, that raises a whole host of other questions, meaning we're going to be printing a lot more money than we expect. And I think when the markets realize that's the option, we're in trouble. But the fact is, official Washington is underestimating the size of the problem because we're living off low interest rates. The second problem that is roughly of the same, by the way, over 10 years, if we normalize interest rates, the total additional cost is $5.4 trillion of interest rate normalization. $5.4 trillion, more than the Bowles-Simpson Commission came up with in total reduction, more frankly than the House Republicans came up with in their budget resolution. Second problem is we are misestimating economic growth. We are far too optimistic. There is a long-established economic consensus out there that following a crisis, you do not snap back the way you snap back after most economic recessions. What you tend to do is continue to grow at trend. Trend in this country is about 2.5%. And oh, by the way, in spite of massive fiscal and monetary policy actions, 2.5% is about what we're growing at. It was 1.8. I notice we're now down to a projection for the second quarter of just 2.1. It ain't working. We're back to the historic norm. Now, let's contrast that with where the official estimates are. The president's budget estimates a 4% growth in 2012, a 4.5% growth in 2013, and a 4.2% growth in 2014. They also estimate that if for every 1 point you miss on that, the 10-year cost, and I'm going to get it exactly right, is $755 billion. Excuse me, that's the 10-year cost of each point. Now, if we grow at 2.5 instead of what the administration is forecasting, we are going to miss by 1.8 points in 2012, 2 points in 2013, and 1.7 points in 2014. Using, again, the administration's budget, their overestimation above what I would call the academic consensus for just those 3 years will cost us a little bit more than $2 trillion over the immediate 10-year period, and closer to $6 trillion over 10 years from the years that we're talking about. This is, again, more than what the Deficit Commission estimated as their cuts. It's more than even the Ryan budget came up with in their cuts. The third point I think we're underestimating, and this gets back to the health care issue, is the reality of the Affordable Care Act, also known as Obamacare. Last week, McKinsey put out a very interesting study of the Obamacare proposal, having to do with whether or not firms would actually continue health care or would dump their people on the federal system. And here's the numbers. Again, I want to try and get them right. We lifted them out of the report. They estimated that 30% of the 164 million people who are now on employer plans would be dropped onto the federal system. That's again a McKinsey number. Now the official estimate is the number would be 9 million. So that's about 40 million extra people being dumped onto the plan. The cost in the first year, in 2014, is going to be $3,200 more than the fine that the government is collecting. $3,200 times 40 million is a $125 billion miss just in the first year. By the third year, that rises to $160 billion. So if McKinsey is right about this, then the underscoring of Obamacare is roughly equivalent to the cost of the Iraq and Afghanistan wars combined. So here we have a situation, that's the total cost, not just the overrun cost. The overrun from Obamacare is equal to the cost of Iraq and Afghanistan. So here we are dealing with numbers that seriously underestimate the interest cost of what we're going to be paying going forward, overestimate the amount of growth and therefore the size of the budget problem. And in a world where we know we can't afford the entitlements we have, we're adding another entitlement that is underestimated by roughly the cost of the Iraq and Afghanistan wars. So I'm afraid to drop this news on the markets. You asked me about the markets. You can check your BlackBerry. I hope they sank during what I just said, but probably not. Thank you.
You know, Larry, that's actually an interesting question, the way you put that at the end. The market sees what's coming, but doesn't seem to want to price it in. And either the market knows something that people around this table don't know, or it expects there's going to be a deal. You want to comment very quickly on that?
I don't think the markets are any different than Washington. I mean, if we really thought that this was going to happen, if we really thought this was going to be a problem, you know, I would again take Mr. Ryan's point. You know, you wouldn't have not passed a budget resolution in the Senate for 2 years running, or in the House last year. And you know, when it comes to pointing fingers about holding up the budget, you know, you were not a member of the Senate in 2006. Then Senator Obama, we all know, gave a rousing speech about the failure of leadership for having that vote. But all 47 Democrats voted against the debt ceiling increase. So I think we have to, you know, get a little bit beyond the finger pointing here. I think the realities are much, much more serious. And I think the way you actually do things in Washington, the way we conduct a dialogue, is through the legislative process. And candidly, as an analyst, I think, you know, I think that Congressman Ryan's proposal maybe would be an opening bid, but there has been no counterbid so far.
Let me bring in Neil Kashkari, ex of the Treasury, now of PIMCO, one of the biggest bond funds in the world, maybe the biggest. Neil, how do you lend the U.S. government money, knowing what Larry just said, and you only charge them 3%? I think you're missing a zero there.
Well, as is noted, we don't. But you know, we shouldn't get too much comfort from short-term Treasury prices or low Treasury yields, because markets can move in a lot of different directions, and we always focus on long-term economic fundamentals. And the fundamentals are clear just based on what Larry said and what we've all been talking about. Short-term, you know, Europe has its own mess, and so there's both an absolute measurement and there's a relative measurement. So if you look at the dollar, we may be the strongest weakling today, but that doesn't mean that we're strong. We're just the strongest weakling today. And so, you know, there's a lot that we need to focus on. Personally, the thing that I'm concerned about, if we look at our political process, our political system responds to a crisis. So go back to the TARP vote. The House voted it down the first time. The Dow Jones Industrial Average dropped 777 points. And then 4 days later, they voted for it. The concern that I have is that if we wait until there's an acute crisis of confidence in the Treasury market, we may permanently undermine the gold standard that Treasuries occupy today and permanently increase our nation's borrowing costs. Remember, in every finance textbook around the world, U.S. Treasury bonds are defined as the risk-free financial instrument. If we undermine that belief, we may now look, you know, going into the crisis, people thought that AAA subprime securities were money good. Now that belief looks quaint and foolish in hindsight. Imagine if we play this game and a couple of years from now people look back and think how quaint the full faith and credit of the U.S. government. And so it's a very dangerous game of roulette we're playing right now.
Yeah, but Neil, Stan Druckenmiller, who's got a lot of money, maybe not as much as you, I don't know, in an interview with the Wall Street Journal, let me turn over to Michael Pond from Barclays, says, you know what? A Treasury bond with a long-term debt deal is worth more than a Treasury bond that's not defaulted on but without a deal.
That's right, Steve. There seems to be an assumption that if the U.S. were to get beyond the debt ceiling August 2nd date, that yields would rise significantly because of a concern over a default or a missed coupon payment. And instead, what's happening is the market's focused on the economics of it all. And if we were to move beyond that date, it would be a risk-off scenario. So investors would get out of treasuries, get out of risk assets, and ironically, move into treasuries. And treasury yields, we think, would actually be lower. The other thing that the market is focused on is the economic impact of a potential deal, or no deal. So if there's no deal, that means 9% of GDP goes away, and that's a double dip scenario. And even if we get a plan in place, but that plan hits GDP in 2012 or 2013, that's also a scenario where the Treasury sort of gets off the hook because yields move lower because growth is lower. That's not a good scenario, but it's not a scenario where yields rise significantly. What we're particularly concerned about, and Neil alluded to this, is the potential for a fall in the dollar, which then causes rating agency action, which then causes yields to go up and interest rate costs to rise significantly. Our analysis shows that if the dollar was less than 50% of global FX reserves, right now it's around 62, down from 72 10 years ago, that would cause rating agencies to move the AAA status down to AA. So that's something that we're particularly concerned about.
Diane Swank, there used to be something called the bond vigilantes, and it brings up images of, guys in Humvees on the trading floor with shotguns, making sure that the government gets its debt in order. They've been completely gone, completely absent. Is the market not functioning here? Is the market crazy? And what is your best guess as to whether or not Senator Bennett and Congressman Ryan make a deal before August 2nd?
Well, I know, Steve, the only reason you asked me that question is because I live in Chicago, the same city as Rick Santelli, and have seen Rick on the trading floor as well. I think the bond vigilantes aren't really at work right now. I mean, we have all these very smart people talking about market reactions, but right now, what I see in the financial markets is I think they are very current-oriented, and they're more focused on European debt situation. They started to, in part, some of the rally we've seen today, in fact, I believe is in part because they feel more confident temporarily about the European debt situation and what may be coming down there. And that's occupying their mind more than what's going to be happening in August. This is a very near-term market, and it's sort of ironic that we make long-term bets on 30 years based on very near-term movements in the economy and the economy around the world. But my sense of what's going on in the bond market today is, one, I don't think they believe it, Larry. I think, if they were listening to, the market would have moved. I checked. They didn't. It didn't move. So they didn't hear you, Larry. You got to talk a little louder. But on the other side of it, I really think it's a near-term focus, and that when you see things like the reactions with the long bond going to dipping below 3%, as we saw the flight to safety take place as European debt situation worsened. Clearly that's we're the best of the worst. I think that was one of the ways we described it, but I think that's not the markets functioning efficiently. And in fact, as a University of Chicago and University of Michigan, which makes me schizophrenic in my economics and balanced in my thought, hopefully, economist, my view is that markets over time generally get to efficiency, but they oscillate around it a lot. And this is one of those times they're oscillating way out of it.
John Burbank from Passport Capital, you had told me just before we started you think the market's beyond this. It's already kind of factored in that there's a deal and it's okay and we're going to get beyond this. And the next question really is a long-term deficit.
There's so many variables. August seems like a long time away if you're in the market every day. We should have a European default by then, and we should understand the rate we're growing in the U.S. I think the 10-year is really telling you that low growth and a deflationary outlook, and that QE2 is ending. It's the markets have responded far more to what Bernanke is doing and likely to do than anything else, I'd say, because investing in inflation is exactly opposite to investing in deflation. Pretty much you have to turn your portfolio upside down and do the opposite. So I think the investors and business people don't have clarity, and there's so many different variables. The question is, who's going to fix this? Is it Congress, or is it Bernanke, or is it the markets? Which is going to happen first? And the question is it going to be inflation, or is it going to be deflation, right? I mean, I like to, a lot of people compare investing to playing poker, and I say it's like we're watching the last table of the World Series of Poker, because I don't know how to invest without watching what Fed does, Congress does, Beijing does, the biggest players who essentially set prices. That's the problem. We have no clarity. So the debt ceiling is just one of many many investors assume QE3 magically is right around the corner. If it's not, asset prices are going to fall. They're going to fall 10, 15, 20%. And then the market can start speculating on QE3.
Were you fumbling with BlackBerry and hitting the sell button while Lindsay was talking?
Oh, I've already been hitting the sell button most of this year.
So you're pessimistic on the outlook. You don't think we figured this out?
Yes. Also,
Lindsay nightmare comes.
No, I agree with that. The problem with markets is that people assume liquidity, and the utility of the very near term is far more powerful than the certainty of the long term. So if Bernanke's in the market buying treasuries, the 10-year goes up to 4%, right? But then growth starts faltering, and you start discounting the end, and here the 10-year goes down to 3%, right? Americans, this is the second time Americans have had to understand and deal with quantitative easing of any kind. So they're not very good at this. The first time, they completely missed the fact that the Fed was going to stop buying mortgages, which is really a lot like buying treasuries. So people don't really quite know how to bet on these things, and there's so many different variables. So the debt ceiling is that's way down the list right now.
We're fortunate to have Carlo Cottarelli here, the Director of Fiscal Affairs from the National Monetary Fund. I've heard the U.S. dollar described as the currency that won the contest, or that lost the contest for the world's ugliest currency. Would you put the U.S. fiscal situation in context? Why do people in times of crisis, for example in Europe, go scurrying for the safety of a currency with a fiscal outlook like Larry Lindsay described earlier today?
Well, it's a very good question. I'm not sure I have an answer. One part of the story is the huge credibility that the United States have accumulated over the last decades, I think, which implies that markets, they do believe that at one point the adjustment will take place. That's part, I think, of the explanation. Of course, this cannot last forever. So at one point has to see the fiscal adjustment, not just expect the fiscal adjustment. The second reason is that monetary conditions in the United States remain pretty relaxed at the moment. A big chunk of the federal debt is held by the Fed, and that should not be forgotten. In terms of stocks, the increase may not proceed further, but the stock is still there and it's pretty large. The third reason is that I would list is that we have seen in recent years also many examples of markets reacting late to developments in fiscal fundamentals. Just a little more than 1 year ago, in March 2010, the spreads over Greek debt were about 300 basis points. Now they are 1,700 basis points. Markets do react late, but when they react pretty sharply.
What about the context, though? When you put the U.S. fiscal situation up against, in fact, I believe, there was a European official today who I think said point blank, he doesn't understand, given the U.S. fiscal crisis, why in the world where Europe's going through what it's going through, why the U.S. is not the focus of fiscal concern in the world.
Yeah, there is a problem in Europe that relates to the way the Europeans are managing the crisis in Europe, in some European countries. There is a cacophony of voices in Europe that is a major problem. And from that point of view, you may have different views in the United States, but there is a single government that manages the fiscal accounts, at least at the federal level. And this is not happening in Europe. You have many governments. That's one problem. But if we look at the fiscal numbers, the fiscal deficit in the United States is much larger than in the euro area. Public debt, if we look not just at federal debt, but general government debt, which includes the states and local governments, not only the federal debt, we're talking about this year a debt to GDP ratio approaching 100% of GDP, of total GDP, which is much larger than the euro area. But there is a single government in the United States, and that's a big advantage with respect to the way fiscal policy is managed in Europe.
Let me just say, if people want to comment, you just raise your name tag up, and you will be duly called upon. We're going to continue the sort of market-oriented section on this. with Steve Ratner, and then we're going to move more to a political. And Steve, I want you to chime in. You've been on both sides here. What's your outlook? Are you optimistic? I guess your former boss Tim Geithner thinks there's going to be a deal.
I think there's going to be a deal because there has to be a deal, because I just don't believe in the end, as Chairman Bernanke said, anybody could see this as a good thing or as a positive part of resolving our fiscal crisis to default on our debt, or to even get into a place where we're trying to cut everything else so we don't default on our debt, which in the corporate world would still be a default, but obviously government operates by its own rules. And so I think what you see going on in the market, as the previous speaker said, is a mix of a view that slow growth is a bigger problem in some ways than the lack of a budget deal, as well as just a refusal to believe that the government would do such a thing. We do have, as I think probably everybody in this room knows, and many better than I do, some precedent for going down this road in the mid-90s, where we had a similar kind of stalemate and threats of a default or of not raising the budget ceiling. And in the end, the market didn't crater. It didn't sort of fall out of bed. It started to move away, and then the government came to its senses and raised the ceiling. So I don't think any of us have a crystal ball. I certainly don't, in terms of when, how will the market wake up. But I do think there's a feeling on Wall Street that it's just unimaginable if the government would actually default on its debt.
Sure, go ahead.
Just a word on what Steve is saying. It's been fascinating listening to everybody. There is first of all, for the journalists in the room, I've been trying to get a journalist to write the following story, and I can't get anybody to write it. So for all of you, I'm less interested in where the markets are than where the people are that are in the markets that foresaw the last crisis happen and what they're doing. I'd like to know what the way they're thinking about this. I saw a guy 4 months ago or 5 months ago that I really have a lot of admiration for, is one of the great investors in the country. I said, "What are you doing?" He said, "I'm buying gold." I said, "Why are you buying gold?" He said, "Because I have absolutely no confidence in your ability to fix this problem." Then I saw him about a month ago, and we talked about the debt ceiling. And he said, "It's not within the realm of my comprehension that you could possibly fail to lift the debt ceiling." Here's a guy cynical enough about our ability to do our work to say that he's buying gold, but not cynical enough to assume that we might actually make a mistake here, which I think suggests to me that the markets may not comprehend the level of dysfunction that's going on in this place, which is why Mike Crapo should be congratulated for being in the gang of 5 or 6 or 4 or whatever it is, which is why we need to follow their leadership.
Maya, do we do this now, or do we wait for Senator Warner? Right. Okay, let's talk about sort of lightning round. We'll begin with Norm Ornstein. What's the best deal you think you can get? Go right around the room.
Look, I think there's a deal to be had. One part of it would be taking Ryan's Medicare plan and maybe adding in Medicare itself as an option. If the markets are going to work better and more efficiently at providing options for senior citizens, let's have another option, which is Medicare, and let it compete against those private plans. I think if you put that together with some sort of tax deal that's in the range of the Simpson Bowles Commission, you could do it. But I have to tell you, I'm not very optimistic. I think what's happening in the markets is just what Steve has said. But when I look at Pat Toomey and others who are convincing their members that there's no real problem here, so what if it goes down? It's just not going to mean very much. And a lot of other members who I hear say, we're in the middle of a revolution here, and you got to spill some blood if you're going to have a revolution. And then I hear both John Boehner and Mitch McConnell say, taxes are completely off the table on this deal. And then I hear others say, there is no drop-dead deadline. You know, typical endgame negotiations, like with the CR, you know that the clock strikes at midnight, you'd better strike a deal. Now it's, well, it might be August 2nd, it might not be August 2nd. It leaves me very, very nervous that we might have to go through at least one iteration where we do hit something that the markets don't believe could possibly happen because it can happen before we come around to some kind of a deal. And even there, it's pretty dicey.
Rudy Penner.
Well, I don't expect anything nearly as important as Norm does. I do think we will not default on the end, even temporarily. But the only way I see around that is not a debate over specific government programs so much, or even specific taxes, but I'm looking for some sort of formula approach, some sort of automatic mechanism like Graham-Rudman that gradually cuts spending automatically and gets us over this particular bump. The danger of that, of course, is that, like Graham-Rudman, it might well be too severe, and ultimately the Congress doesn't go through with it, and in that case we're left just where we are right now.
Could it be as simple as what we talked about here with Senator Bennett, Congressman Ryan? Could they simply agree on a framework and it's 3-to-1 or 2.5-to-1, whatever the number is? Could it be as generic as that, and that would be enough to get over the finish line and get the debt ceiling raised?
Well, I think that, in fact, is the sort of thing that may happen. Whether the one will occur, that is the tax increase, I'm not so sure. But some sort of automatic formula that sets targets for spending that are hopefully not so severe that they are at least believable. And then after that, at some future date.
Dick Ravitch, you want to weigh in? Push the button.
It's hard for me to believe that there will not be a deal to avoid the debt ceiling issue. And in my judgment, the sooner that happens, the faster we'll get on to the more serious problems of what the long-term budget deficit is going to be. So I would say that I'm no expert at the bond markets, but it's hard for me to believe in the world that I live in that the political system will ever let August 2nd pass with the debt ceiling not raised.
Let's go to Maren Obernower, the chairman of, when you look at this whole thing, how does it affect you and your company?
Well, let me say first, I think there is there's a calendar point here and that we're not recognizing, and pardon my cynicism, but August 2nd is when the Congress goes on vacation, and I cannot imagine that the Congress is going to go on vacation and leave this problem not, unresolved. So the second variable that we're not talking about is we're going to resolve this problem for how long? For a year, for 2 years, for 2 months? Are we going to kick the can down the road in small increments while we keep debating this thing? And what will that do to the markets? So, to answer your question, I think many people have underestimated the power of uncertainty. Uncertainty of fiscal plans, uncertainty of tax plans. It freezes businesses. We can't make judgments about the future. We can't calculate returns. We can't, there's a whole lot that we can't do because we're just kicking this thing around. And I have to, we're all disappointed in the political process. We're all disappointed to some extent in the media process, because I don't think that that the media is demanding an adult conversation as they should be. But the sector I'm the most disappointed in is the business sector. I do not know why business leaders from all sectors, large businesses, medium-sized, are not demanding that we solve this problem. I don't understand it, and I'm deeply disappointed in my own sector.
I join you in that. Matt Miller, we're going to make a turn to the political section of the afternoon here. So one of the big criticisms last night in the Republican presidential debate was the lack of leadership from President Obama on economic issues, and specifically on the issue of the deficit. Has President Obama led, and where is that leadership?
I guess the short answer is no. And, but a couple thoughts just linking what's gone before to what you've asked. I mean, first, the fight over the debt ceiling is not a fight about whether we're going to incur more debt. The Republicans are all on record for the Ryan budget, except for 3 or 4 of them. The Ryan budget, in a way that hasn't been widely reported, adds between $5 and $6 trillion to the debt in the next 10 years. It doesn't balance the budget till the 2030s. It's only better than Obama's framework by comparison, because the Obama framework adds $7 trillion or so in the next 10 years. So Republicans are on record for massive increases in debt in the next 10 years. Not a partisan remark, just looking at Ryan's numbers. And if, as a political matter, I'm not sure why the White House and the Democrats don't say, let's just raise the debt ceiling by the amount of debt it would take to accommodate Paul Ryan's budget, and we'd be done with the matter. So it's not about the debt. It's about the debt ceiling, and what that reflects as a political matter is the lust for a forcing device in Washington at a time of divided government, and the almost desperate extent to which the frustration over an ability to drive something to happen is going to push the political system, including right to the edge of what could be unknowable market risks if we get close to the end. I guess my worry, I mean, on Obama, there's no question that each side has things that they're playing total games with. It gets back to Alan Simpson's remarks about Grover Norquist and AARP. We have to slow the growth of Medicare and Social Security. The Democrats don't want to talk about that by and large. We have to have taxes rise as a share of GDP when we double the number of people on Social Security and Medicare, something that Paul Ryan or Grover Norquist or the Republicans don't want to acknowledge. That will include higher taxes on people under $250,000 a year as we double the number of seniors in this country, something that the President and the White House won't acknowledge. And so we're caught in these dueling charades with obviously the ability to make a solution, stuck through all this.
Thank you. Sure. Congressman Voinovich.
And y'all think that it will be increased. I think it will be temporarily or some time, and then they'll have a conversation about dealing with the real problem that we are all talking about here. But let me tell you about a little scenario on December 24th, 2009. And we were in a situation where we were asked to increase the debt limit. And the pressure on all Republicans was to vote no. They have the 60 votes, and they're going to have to do it. Well, I happen to know that Evan Bayh, under no circumstances, would have voted to increase the debt. And I was asked to stick with the team. And I said, my conscience won't let me do that. We're going to go home and not increase the debt ceiling? Do you understand what impact that's going to have on the international marketplace? And so we got it done. But don't be so sure that you don't get to this point and you got some people who are very stubborn and basically say, stick it.
Ms. Wade, if you would wait just 1 second, I want to do a quick poll here. How many people think there will be a deal before August 2nd?
On the debt ceiling?
On the debt ceiling. An increase in the debt ceiling before August 2nd. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I got 20. And how many are no? Is it going to be 20 as well? Is it 40? 1, 2, 3, 4. Okay, 20 to 7. Now, just the second part of this.
Well, August 9th, so I'm in either camp.
Why August 9th?
I think that when they go to the brink, they'll go slightly over it. Yeah,
exactly. Yeah.
Oh, so it wasn't framed correctly, Maya. That's what happens. When I get in trouble, I blame Maya right away.
We sell Utah.
I thought it was New Jersey. No, never. It's always the old joke. And
we
real
get
quickly,
more for Utah.
Will such a deal, whatever day it happens, get us through the 2012 elections? Yes or no? Yes first. No? One person. Larry? Yes, yes. This is yes, the deal will get us through the 2012 elections. 2, 3, 4.
Politically or financially?
Okay, Carol Cox-Wade is the former chairman of the Committee for a Responsible Federal Budget.
I think that there are, first off, I want to repeat something Alice Rivlin said years and years and years and years ago. This is not economically a difficult problem. It's a politically difficult problem. And when you ask yourself why the Europeans would fly to dollars, for instance, when they look at the relative ease of the decisions we would have to make to solve our problems, I think they find it inconceivable that we won't find a way to make those decisions. If you compare the kinds of decisions we would have to make in the United States to the kinds of things they're having to do in Greece, for instance, it's laughable. It is. You know, how hard is it to decide that I should have to pay more for my own Medicare, or that I might get less in Social Security next year, given the fact that I'm on the board of a healthcare company. My husband, my late husband, God bless him, was the vice president of a Fortune 500 company. I have healthcare coming out the ears, and the American taxpayers are still going to pay. People who work for a living and live on what they earn are going to pay higher taxes to give me more Medicare coverage. I mean, how hard is it to make that decision? I think that's one piece you need to look at. But I think there's another piece you need to look at that I only realized when I moved out of this town 7 years ago. There are a majority of people in this country who really don't think Congress should raise the debt limit. For members of Congress to take that vote, they're going to have some splaining to do back home. And given the fact that the government is spending at levels far beyond anything we've ever done historically, and that the deficit and debt are growing exponentially, I am very sympathetic to the members of Congress who feel like they have to have some red meat to take home to their constituents to explain why they're behaving the way they're behaving. So on the one hand, I would say to you, I'm not too surprised that the rest of the world looks at us and says, of course they'll reach agreements. The kinds of decisions they're talking about at the margin are trivial compared to some of the things the rest of us face. But on the other hand, the politics of it are extremely difficult because people, God bless you, in the media, have not done a very good job of either explaining to people the seriousness of the issue, explaining the kinds of choices that actually can be made to solve the problem, and the necessity to make those choices sooner rather than later.
Thank you. We are going to get to the folks over there in just a minute, but what we want to do first is we're going to get our senators a chance to speak here. We started with the Republican in the last round, so we'll start with the Democrat in this round. Did you, Senator Warner, did you guys make a deal this afternoon? Tomorrow? When?
Close. Sooner than later, I sure as heck hope. And let me first of all thank Maya and her great help, and Michael Bennett and Mike Crapo and some of the others who've been part of trying to get us to a solution. I mean, I just came into the last couple of comments. Mr. Oberauer's comment about where's the business community? Right on. I mean, you talk about what will put an absolute stop to any recovery. An interest rate spike? We care about the deficit. Every point the interest rates go up above CBO estimates, we're adding $1.3 trillion to the debt over the next 10 years. I mean, this is decision time. And some of my colleagues know I've gotten a little obsessed about this. But we need a few more folks obsessed about it. When we've used our bullets, do we really have monetary policy left? Is there any appetite for a further fiscal stimulus? The best job creator we could do is get part of that $2.6 trillion, $2.5 trillion, pick your number, that's on the sidelines, off the sidelines, back investing. in the country. That is exponentially larger job creator than anything else we're talking about. And to your point as well, I mean, you know, it's downright un-American that the Brits have bit off this problem in a much more aggressive way than we have. And I, you know, frankly think, you know, I'm new to Washington, but you know, my old job we had to balance budgets, and as a business guy we had to balance budgets. You know, I've fundamentally believe there's been a number of us in good faith trying to take on the kind of almost religious issues about revenues or about entitlement programs that are recognizing you can't do it on one side of the balance sheet without looking at both. And we've got roughly a 4.5, as Saxby Chambliss and I said last week at the Economics Club, we've got roughly a $4.5 trillion deficit reduction plan over the next decade that we've got a lot of it done. There's still some outstanding issues, and Mike will speak to this in a moment. It isn't perfect. Chances are it'll make everybody at the table a little bit mad. But when the alternative, and this notion of the alternative being a viable option, that is one of the more stunning things that I've had to deal with. Members in both parties who kind of say, well, maybe it wouldn't be that bad. I don't know what economic Bible they look at when the United States defaults, that somehow that could be a good proposition. When right now the market has already priced the chances of our default as higher than the chance of Mexico or the Philippines or Panama. They are better credit risks than the United States government. I mean, everything else that we talk about in Washington pales in comparison to this issue. The ability to have a growth agenda, the ability to really create jobs, the ability to get the whole slew of other things done, until we can get our path, at least path of getting our balance sheet back in order, it all becomes noise. And as Cox mentioned, we've got more runway than any other country as the reserve currency in the world's largest economy. But you know, if we simply kind of limp through a debt limit extension and go with conventional punditry wisdom of let's kick this down, the real can down to 2013 after the presidential races, well, we probably got that chance. We probably got that much runway. But why would we roll the dice with every American's job, financial well-being, and for that matter, the whole world's? What are the chances are even 10 or 20% that we don't have that runway? When none of these problems are going to get any better in 2013. We add $4 billion a day to the national debt. And I think the moment is now. I think that, you know, I wish the Vice President and his colleagues all the best. I sure as hope and pray that, and we're going to be running back and having another session today, that, you know, there is a bipartisan solution, because I think in the end of the day, that's the only way members in both parties with the political orthodoxies out there will be able to get something done. And it's the only way I think the American public will buy into something.
Senator Crapo, it was $1 trillion yesterday. Are you up to $2 trillion a day?
It goes up $1 trillion a day. Are you talking about the debt?
How much you guys have agreed to cut? We're in agreement.
I think Mark has indicated that what we are negotiating over is in the neighborhood of $4.5 trillion. We have not made a of 6 or 5. That's going to all play out. Is going to have to ultimately come forward with a very strong. Do we need to change mic? Is going to have to ultimately come forward with a very strong plan. But I think that it's very important to understand the distinction of some of the comments that we're talking about here. I got here also for about the last 15 or 20 minutes and don't know the rest of the discussion that's been held here. But in the discussion about the debt ceiling, and when you held your poll, I didn't hear a lot of confidence, and I think I agree with the lack of confidence in the fact that there's likely to be a monumental fundamental change in America's fiscal policy that will put us back on the right course and we can all go on vacation and feel good about it over the debt ceiling. I do believe we will get to a deal on the debt ceiling at some point. I didn't even answer your poll because I didn't know how to explain when I think that deal will come together, and it will not be pretty when it happens. But when it's over, we will still have a debt crisis in America, and we will still need to be putting together a major paradigm shift in America along the lines that Mark Warner has just talked about to help us get back onto a right path. And that is what the Gang of Six is dealing with. We are dealing with a complete change in America's fiscal paradigm. When we started it out, and I see a number of the other members of the commission here today, we spent a year looking at every aspect of this issue, and some of the basic agreements that we made then, which the Gang of Six is carrying forward in our negotiations, are first that everything has to be on the table, and that we in America need to develop a comprehensive approach. And in looking at the broad categories of the approaches that we took, we looked at everything. Everything in our discretionary spending, including defense spending, was on the table, was in the plan. Entitlement reform was in the plan, not as strongly as I'd like it, but it was in the plan. Revenue was in the plan, and I'll come back to that in just a minute. Social Security was in the plan, and enforcement was in the plan. One of you earlier in your comments pointed out that maybe a formula approach would be better with some teeth in it. That's also in our discussion, because we recognize the politics. But when we are done, we are going to be able, if the Gang of Six approach is able to be brought forward, and I believe it will at some point, we are going to be able to put together a comprehensive paradigm shift in America's fiscal policy for people to consider. And I believe that, although you could do it in many different ways, what we will do is come forward with an approach that can have a reasonable shot at getting 60 votes in the Senate. And that's what we need to be building on in America. And just quickly to go back to the revenue side, Mark mentioned the huge battlegrounds, and there are many: Social Security, entitlement reform, and revenue. On the revenue side, the battles still rage. But fortunately, early on in our discussions in the Fiscal Commission, the point was made that if you look at America's Internal Revenue Code, our tax system, if you tried to make one that was more unfair, more complex, more expensive to comply with, and more anti-competitive to American business posture in the world, you'd be hard-pressed. And what we need to be looking at on the revenue side is reforming our tax policy in a way that, as the Fiscal Commission did, ultimately reduces tax rates, broadens the base in the code, eliminates that complexity and compliance cost, and makes us more competitive, and generates a dynamic opportunity in America to grow our economy in ways that will give us the ability to deal with the revenue needs that our government needs to have in dealing with our debt crisis. And until we can get out of the old traditional ways of fighting over taxes, whether to raise the tax rates or lower the tax rates, and get into a discussion about reforming our tax code in terms of the revenue piece of this equation, we are simply going to be going back to the old stale problems that helped us get into the mess that we are in. The same kind of discussion can be held with regard to entitlement reform, the same kind of discussion with regard to Social Security reform, and so forth. But I'll just conclude by saying what the Gang of Six is about saying that we are ready to put aside the partisan differences that we have. And we are ready, as Republicans and Democrats, like I said, we don't have the deal yet. And when Kent Conrad cast his vote for it as one of the senators when we cast our votes for the Fiscal Commission plan, he said it better than anybody could, I think. He said the only thing worse than voting for this plan is voting against it. Meaning that there were things in it that were absolutely unacceptable to every one of us elected officials on the panel. And yet he did it. I did it. The other senators on the panel, with the exception of one, did it. And we did it realizing that we needed to move it forward, knock off the rough edges, got engaged in the process of building something that can get those votes on the floor, and then put it out. And let the business community, and let the media, and let the American people see an alternative that has a bipartisan opportunity to help us change the paradigm in America. And that's what we should be doing.
Let me add one closure note before.
Go ahead, try this one here.
Michael's going to be back up.
No, I've already done my thing.
Just one, again, as a relative new guy to the Senate, it's been a really remarkable process, though. George, you would have been proud of the six of us hanging in for hours and hours and hours on end. And I want to particularly thank Mike Crapo and Saxby Chambliss and Tom Coburn, through most of this stuck in and took a sabbatical. But the thing we have to guard against, and why I feel this obsessiveness about trying to get this plan out sooner than later, is that we've seen some folks on the Republican side who try to draw these bright lines, and if you cross the line in any way, even on tax expenditures, that somehow violates pledges and codes and what have you. And that successful formula, from a political standpoint, we're now seeing folks on the Democratic side say, well, we ought to maybe do the same with those same bright, bright lines around entitlement programs. And the more we get into that kind of conundrum, the ability for folks to kind of reach that common ground is going to diminish. So my thanks, Saxby and Mike have taken particularly a whole lot of arrows on this. They need to be supported for their efforts. They need to, get more than attaboys. Those of you who care about this, rather than just talking to each other, we need to be talking to a lot of your friends in the Congress in both parties to say now is the time to step up. If there was ever a chance to kind of check your partisan hat, it's now, because this is as dramatic a test this country will face as anything I've seen in the last 25, 30 years, and as anything we will see in the next 30 years. If we don't get our act together on this, then virtually everything's at risk.
Senator Crapo, the newsman in me can't help to try to advance the ball a little bit, and forgive me if I sound like a bookie here, but is 3-to-1 a workable formula? 3 parts spending cuts to 1 part tax revenue enhancements? Here's the microphone.
Yeah. First of all, 3-to-1 is the formula that the Fiscal Commission came up with. And you used the right word, revenue. If you look at what the Fiscal Commission did, it came up with what we call the zero option plan. That is, every single solitary tax deduction, credit, and exemption in the code was eliminated in the proposal. And the vast majority, and by the way, that is $1.1 trillion a year, not a decade, a year of revenue that the government doesn't collect. And of that $1.1 trillion, yeah, 1.1 trillion. Of that $1.1 trillion, the Commission allocated everything but about $700 billion of it to rate reduction. And that is the basic model. Now, as Mark mentioned, even $1 not going to rate reduction and going to debt retirement has been argued by many, and I can see the argument, that it's basically using tax revenue to support spending. And I actually believe that the right line is to go dollar for dollar. And that's the way that I think we ought to do our tax reform. But the debate that the Commission focused on was virtually all the way there. It was everything out of $11 trillion over 10 years. It was less than, it was over $10 trillion in rate reduction. And so the point is, we can't, in this debate that we always get thrown into, which the newsman wants to bring up, this debate over, have you got a tiny piece of this slice in there that helps to retire the debt instead of all of it going to rate reduction, I think ignores the fact that the basic part of the core part of the reform is getting the rates down and getting America more competitive. And like I say, I would prefer to do it all the way and then let the dynamic growth of the economy pump that revenue back in. But there's a debate over that, and that's a debate we may have to have a vote on in the larger group of the Senate.
We're going to bring in some of the other voices. Colby has been very patient.
Well, it just occurred to me listening to this that maybe this isn't so difficult because almost everything seems to have been said, and now we'll start repeating ourselves, but maybe it doesn't hurt sometimes to repeat it. I just want to make a couple of points. First of all, as a preliminary one, I want to agree with Senator Warner that it's quite possible, quite likely, that we could limp along with this through the 2012 election. But why do that? And I say, why do that? Not necessarily from a policy standpoint, but from a political standpoint. Because if we limp along through the 2012, the economy is for sure going to be limping along. And that isn't going to be healthy for politicians that are running out there. And the American people are going to figure out the relationship. They've already figured out the relationship between this and the problem, the fiscal problem we're facing, and the debt, and the politics of it and the economy of it. So why do it? There's no point in doing that. I want to make just 3 quick points. First, there is the possibility of making a deal, and it has to include it has to include revenues as well as spending. I don't know whether 3-to-1 is the exact right ratio, but it does have to include revenues, and Republicans have got to get off of that. And some Democrats have got to get off of bashing the entitlements every time we talk about entitlements. We've got to put all of this on the table. It doesn't necessarily have to include rate increases, as the Commission quite well pointed out. You can do this with tax spending, and we know what tax spending is all about, tax expenditures. This god-awful system that we've developed over the decades of all the different deductions that we have. We can eliminate or at least cap some of those, put some of this stuff back on the table there. And that would allow us to actually have lower rates that would allow for greater investment and greater economic growth. Second point is that it does definitely have to include all the entitlements. Now, Paul Ryan's budget talks all about the health entitlements, and he's absolutely right that that's the key part of this. That's by far the biggest driver. Maybe my bias is because I spent my last 10 years in Congress working on Social Security reform, but I think Social Security reform is a doable one. And I think it's also got to be included in this. So all the entitlement programs have to be in there. And the third thing is that it's got to include some kind of a forcing mechanism. None of this is going to work if you don't have some forcing mechanism. We saw that as soon as Graham-Rudman went away. That worked pretty well. But once it went away, then it was Katie bar the door after that. So you have to have some kind of a forcing mechanism in all this. And that's, I guess the conclusion of all that would be, this isn't really a technical thing. It's about the political will. Do we have the political will to do it? And I think the American people are coming more and more to see that it is about that and to demand this of the politicians. The quicker the politicians recognize that and step up to the plate on it, the better off we're going to be.
Barry Anderson is the former acting director of the Congressional Budget Office.
I think it's worthwhile looking at the history of debt limit increases and applying them to the current context. And in that, look at the history, particularly what has been happening in the 90s and the 80s, I think there's only 2 dates that really matter in the next couple of months. And I don't think either of them are August the 2nd. The first date is tomorrow, June the 15th. The reason why it's tomorrow is that there are 4 dates when estimated payments are made. They are April 15th, June 15th, September 15th, and January 15th. Tomorrow is June 15th when estimated tax payments are due. When you're looking at it from the Treasury point of view, from OMB or from CBO, those are the most difficult times to predict on a daily or monthly basis. I don't think it's gotten any easier from when I was doing it in the past couple of years. In fact, I think it's gotten harder. So for anybody to say, we're going to hit the debt limit on a specific date like August the 2nd, without knowing what we're going to get tomorrow or the weeks after that, I think it's just not feasible. You just can't make that estimate. The second important date isn't, again, August the 2nd. I think it's the date when Congress adjourns. And I think that's a couple of days after August the 2nd right now. It's not on August the 2nd. The reason being, as was mentioned before, would Congress adjourn without passing a debt limit, particularly if things like are going on right now get even better and closer? There's one other date aspect I want to make. Let's say everything works out beyond the expectations of almost everybody at this table, and we actually come to an agreement. And that agreement involves not only entitlement cuts, but enforcement and revenue and a pile of other things. In the next 6 weeks, there really isn't the time to technically draft that legislation, take it through the Congress, vote on it, and have it signed by Congress. I say that because, again, if you look at sometime in early August, when Congress adjourns, and if they're close to a deal, that means there's almost certainly going to be some kind of short-term extension. short-term being till September, maybe even October, for the deal to work out.
Do you think that was helpful? I mean, we had a date, August 2nd. Now you're telling me it may not be, so, I mean, let's just not tell Congress the truth on this.
I was just trying to help the business community. They're not excited about it yet, and they should be for a couple of weeks.
So June 15th tomorrow, we call the Treasury. It could be July 27th. It could be August 15th.
It could be later. Tomorrow, or actually it takes a while for the checks. It's the U.S. Postal Service, so it's probably July 15th as opposed to June 15th. But after you get an idea of what the amounts that come in from tomorrow will have a big impact on what the specific date is when Treasury runs out.
Once again, Maya, why'd you tell me to call on this guy? Let me call on somebody who speaks enormous amounts of sense and did so in today's New York Times. David Brooks, who wrote I guess a pox on both their houses column this morning, arguing for something of a Hamiltonian party that would incorporate the best of both worlds. And I want to just put a question to you, David. It strikes me when I listen to these debates and think about this economically. It's not Republican Democrats, but the new politics has got to be young versus old, doesn't it?
I'd like to start a generational war as much as the next guy. You know, I tend to look at these things sociologically, and so I actually think in this room we have a bit of a focusing illusion problem, which is that everybody in this room really cares about this issue. And I mean, I think you senators are heroes in doing the Lord's work, but the fact is most Americans don't really care about this issue, and I would say the vast majority of members of Congress don't really care about this issue. They see it as more or less like global warming. There are a bunch of very smart people who think it's a really big problem, and I guess they're probably right, but I sure as hell am not going to sacrifice for it. And so I see this as a sociological problem as much as anything else. You've got a lot of people out there who think Washington is irresponsible. They don't trust it. There's no social trust. They see their lives dissolving around them, and Medicare and programs like that are one of the few anchors they can hold on to. They see 9% unemployment, and they think some people in Washington want to cut spending and raise taxes. Are you crazy? And so I think this is a huge sociological problem. The unformed nature or hostile nature of the American public is, I think, the core problem. I don't think this is an elite problem primarily. This is a national, sociological, and democratic problem. And so to me, what's been interesting covering this debate is how different politicians interpret the national mood in different ways. It's been particularly interesting, for example, as different sorts of Republicans look at the debt ceiling debate. Some people, I think Mitch McConnell is one of them, see this as a huge political winner, the only moment when they have huge leverage over the president because they look at the polls. Other Republicans imagine the president announcing he's going to delay Pell Grants and Social Security payments and saying this is a huge political loser. And I don't think the Republicans have any closure on that. I don't think Democrats really understand what the political consequences should be. So to me, this is a problem, an essential problem of too much democracy. And that is the fundamental barrier as different politicians who don't really care about the issue are trying to measure the public reaction among people who don't care about the issue particularly either. Hence my pessimism.
Congressman Warner.
I used to be governor, so, and echo what you said about, as a governor, you knew when those receipts came in. The only thing I would urge is, David, I would take some issue. No one has yet made that call to arms to the American people that if everybody's going to have some skin in the game.
Right.
Most of this has been the normal, we're pitting one group against another. And to paraphrase Churchill, you can always count on the Americans to do the right thing after they've tried everything else. Right. Well, we've tried about everything else now. Right. And I think, I respectfully disagree, and I think the American people, this is not hard math. You're spending at an all-time high. Your revenues are at a 70-year low. You got a lot of folks getting older. People in their gut know that, as Mike said, that some of the fundamental paradigm has to shift. And we have got more running room than virtually any other country. We're not going to fix this overnight. But the confidence builder that would be put in place if we had a real plan, and one of the things that we worked very hard on, and Mike in particular was a real advocate for this, was making sure that if we had a plan, there was enforcement mechanisms. And I'm just very anxious for us to get it out and let us take the arrows and shots so that, we got to give somebody something for people to be for. So far, there's not been any bipartisan effort for something that everybody can rally and be for.
If I could just say quickly, if you guys came up with something, it would have a galvanizing effect on the public. There's no. But then to get to the wider group of people who don't only semi-care, there would have to be some extremely hard political decisions to be made. I think that a lot of Republicans believe, probably correctly, that if they cut a deal with the president, it would be a huge political win for him, and they'd be screwing their own nominee. And then I think Democrats, is the president really going to take a 3-to-1 cut, spending to tax cut? What does that do to people in his own party? I mean, I think if you did that, it would be a huge first step. I think what Ryan just said, there are 9 steps that have to be taken. There are a lot of steps out there, and I would just emphasize that has to do with the national mood and galvanizing the public as much as anything.
Peter Welsh, Democrat from Vermont. Yeah, we have this microphone shortage.
Well, I kind of agree with what Mr. Brooks said, but here's the question if you have my job. Congress is an institution that has some responsibility to make decisions, and it's not making them. And one of the reasons it's not making them is that, especially in the House, every issue is seen as an ideological battle to be won rather than a practical problem to be solved. The budget is a resolvable problem. People sitting in this room could probably come up with something, and in fact the Fiscal Commission did. And the Gang of Six is doing a tremendous job as well. But there's no room in the House as we now are operating to actually have the trust that is required in order to come to some common ground decisions. And what you're seeing when the political process has no capacity to do that is played out with health care. That was passed by a totally partisan vote in the House, and then it was repealed by basically a totally partisan vote in the House when there was a new election. And the benefit of having some bipartisan buy-in is that it gives some concrete signal to the American people that we probably got it more right than wrong. And it gives them a little bit of confidence that what we got wrong, we'll be willing to make right. But that is not at all where we're at. Now, I actually have an enormous amount of apprehension about the debt ceiling. You know, I think ultimately it will be increased because it has to be increased, but there's an immense amount of damage that we can do if we stumble our way reluctantly into being forced into doing what we should have done. This is not the same situation as a midnight resolution of keeping the lights on in government. I mean, at a certain point, if the markets do turn, and there's debate about it, you know, we do have this irony of the lower interest rates, but if it does turn, it'll be savage. But the loss of the erosion of institutional confidence in the Congress of the United States is an enormous threat to the strength of the country. And it goes hand in hand, I think, David, because who's going to make the first move? Is it going to be Congress and us doing our jobs? And the only way we can effectively do it is by doing it together. Or are we going to wait for folks who are hanging on by their fingernails with the real challenges in the economy, stagnant wage growth, very high unemployment? So this is a very serious problem, and I actually do think that what the Bowles and Simpson Commission was doing and the Gang of Six is doing, where there's a recognition that how we do it is actually as important as what we do for having any potential for long-term resolution is quite vital.
Folks, the list is getting quite long now, so if we could keep our comments to the 2 to 3 minute range, that would be fantastic. Franklin Ranston.
A couple of points. First point, I think we should have learned in the last couple of years that looking to the bond market as a predictor of events in the economy is a less than perfect measure, if for no other reason that the strategies that they're employing now are so complicated that you really can't tell, other than the net effect of what the investors are really thinking. The second point is that we have to distinguish in looking at a failure to extend the debt limit and a actual or technical default from the underlying economics and the politics. What we're talking about is a political default. There's no question in anyone's mind in the bond market or elsewhere that the United States can afford to pay its bills. I mean, no matter what the rhetoric, we still have one of the smallest governments as a percentage of GDP in the world. So the rest of the world isn't looking and saying, oh, the U.S. is really up to the limit of what they can afford. Greece maybe, but the United States is nowhere close to the limit of what we could afford to pay. So it's not a question of can we afford to pay the debt. This is solely a question of do we choose to pay the debt? And do we politically choose? And I think the analysis that David Brooks gave is exactly right. At any given point in time, somewhere south of 20% of the public cares about fiscal issues. Sometimes it can be a little higher, sometimes a little lower. In 1997, the last time we had a consensus around actually balancing the budget, it was a little higher. And it was a little higher because a guy from Texas had run for president, galvanized a lot of people. And these people were all up for grabs. And both parties were trying to figure out how to appeal to them, and fiscal policy was the one thing they could say that gave them a shot at them. Right now, the politics, as I read them, are pushing each side further and further to their base, and which means that it's going to be very difficult to manage to work our way through this. Indeed, because of some of the rhetoric that's out there, there are members who are going home saying, I will never vote this way. And trying to get a member, as cynical as you may be about members of Congress, trying to get a member who's gone home and promised he's not going to do something to turn around a couple of months later and do it, no matter how virtuous the act is very difficult. So the leadership in Congress is really putting themselves into a corner. And I think it's a corner that they may not appreciate all the nuances. It is entirely possible that Republicans will be able to force a action, or attempt to force action around a date. And it turns out that the Democrats say, okay. And if the Republicans have gotten prominent enough around the use of the debt limit as a tool, they will get all the credit for whatever flowed from that. And the Democrats can sit on their hands and say, well, they did it. You know, they said they were going to do it, and they did it. Trying to manage 535 people on a subtle path to a given date, to a given result, I think is irresponsible. And no matter what your goal is. So that's why I voted that it was unlikely that there would be an agreement before August 2nd. And I think it's entirely possible we could have a political default. There are two people in this room I'd just like to mention who, in the context in which I first met them. Dick Ravitch I met after New York City had $6 billion coming due and politically chose not to take the steps necessary to pay it. And New York City had a default. I met George Voinovich after he was elected mayor. He was elected mayor, and the biggest issue in the campaign was on a politically determined default on the debt of the city of Cleveland. Each of these cities took over a decade, and some might argue 2 decades, to return to the market in any semblance of what they were before. Because the market saw that this wasn't that the city of Cleveland couldn't pay the $17 million. And New York City had the wealth to balance its budget. It did not have the political will. And once the lack of political will is shown, the markets all of a sudden wake up and they go, my God, there's politics in there. And they react in extreme ways, and you spend all of your time trying to explain, no, we can afford it, we just had a little glitch, it was a couple of days, it never happened again. But you now move politics up as the most salient factor, when in most days it's not. So my prescription for success, and the long-term success that Senator Warner was talking about, is someone is going to have to figure out how to mobilize enough people in the population to care about this, that the competitors on the Democratic side and the Republican side are competing for them, and that will make a difference in real elections. Other than that, it is much safer and much easier to just avoid the problem and hope that it will go away. But if it becomes politically salient, if there are 25% of the population who say, I'm actually going to vote based on what people did here, then I think we're on the path to having a long-term solution.
Steve, I'd like to respond to that because I don't agree with Frank.
Absolutely.
Yeah, a big disagreement. I was told we ought to borrow the money to pay back the misspent bond funds. And I said, I'm of Slavic background. we don't borrow money. So I went to the voters of the city of Cleveland after the business community did a complete operations improvement task force and said we needed more money to get the job done, and asked the people of the city to raise their taxes, that we wouldn't borrow the money, we'd pay it off year after year after year, like my grandfather used to pay us real estate taxes. And in '87 we burnt the mortgages. And the fact is that there is an audience out there today in this country, and I don't agree with you, David. I go to meeting after meeting and I ask the question, some of you heard this, how many of you believe in this room that your standard of living is better than your parents? Almost every single hand goes up. I was in a place of 800 people. I asked the next question, how many of you believe your kids and grandchildren's standard of living is going to be better than yours? And maybe 5 hands went up. There is a feeling of real concern out there. And if we could tap into that, I think we'd have a chance of doing the paradigm shift that Crapo is talking about. But right now, I think the politics of this thing, everybody trying to figure out how they're going to one-up the other one, we're not going to get anything done, and it's what I promised when you remember, I voted against that compromise. I said the speech was, we're going to kick the can down the road. We need a crisis to get people's attention. But I do believe there is a chance, and that's the challenge of this group. Are we going to take this over the mountain, or are we going to wait until after the next election?
Congressman, I just want to skip the line here and go to Dick Ravitch, whose name I remember from newspapers when I was growing up. I don't mean that in a bad way, I mean in a good way.
Thanks very much.
But tell us about this, what Franklin Raines brought up here. I mean, it sounds like there's a point to be made here for brinksmanship. Bring it to the end, call their bluff, let the cards fall where they may.
I don't think that's what I said.
I know, but it was the implication of what you said. If it worked, but it worked in New York, didn't it?
It wasn't intentional.
But it worked.
The banks decided on a day certain they would no longer underwrite the notes and bonds. So it was the market that forced a solution, and the solution was, and not really comparable to the federal situation, but we borrowed money for transition purposes only, which is not irrelevant to the kind of program that the senators were talking about. Number two, the state enacted a moratorium on the payment of interest on the city debt, which ultimately was held unconstitutional by the highest court of the state. And the lesson in that is that the ultimate threat of confiscatory levels of taxation is far greater, in my judgment, than the threat of the immediate impact of default. But I would like very much, and it is relevant to comment on what David Brooks said, because I agree with him to a large degree, but part of the reason for it is that local and state government has far more interface with the citizens of this country. And it is states that are responsible under our constitutional system to provide services. They're responsible for our infrastructure. They're responsible for public education. And they're responsible for the administration of the social services, no matter what percentage of those are ultimately absorbed in the federal budget. But the citizens of this country look to state and local government as the provider of those services, and to whatever extent they don't feel the pinch, and they're beginning to now, they hold local politicians responsible, and there is a fundamental disconnect, in my judgment, between the Congress of the United States and state governments. There are very few members of Congress whose election or re-election is dependent on the fiscal well-being of a state. And a similar disconnect, strangely enough, exists between states and local governments. And therefore, I don't think a true analysis of the problem, and I believe the federal deficit problem has to be solved, and I agree with Senator Warner and those who have said it, better to be done before the election of 2012. But I think to do it without a full understanding of the implications to state and local governments, because to the to whatever degree you want to cut federal discretionary spending, and I think it was Maya who told me that $650 billion of the federal budget are pass-throughs to state and local governments, and that in many ways that's the most vulnerable part of the federal budget to cuts, and therefore those cuts that are passed to state and local governments are going to result in higher local taxes and in cuts in service, in infrastructure spending, which is already occurring to a very dramatic degree in practically every state of this country. And I think those consequences have to be measured. There is also a $3 trillion tax-exempt market out there, which people like PIMCO have said is not in jeopardy, and I agree with that. But I agree with it only to the extent that states can't afford to lose access to the market because it's the only way they're assured of producing cash. But nobody is tracking the extent to which that debt is being incurred in a way that is not enforceable by the debt holder. A higher and higher percentage of that debt is what's called subject appropriation debt. And as teachers get fired and public service employees get terminated and services get reduced, the politics at a local level are going to change in a far more dramatic way than they are at a federal level.
Ruth Marcus from the Washington Post. Help me understand what these guys who were, the senator's gone, we can talk about it now.
Well, you know, I'm really sorry that the senators are gone because I wanted to join the chorus of heaping praise on them for doing the Lord's work and actually I'm tempted to say the president's work as well. And as long as I'm in the heaping praise business, I like to heap some praise on Senator Simpson. We talked about a galvanizing moment. I think that was your phrase, David. Well, we had what looked as if it was the possibility of, it was the galvanizing moment of the possible beginning of something with all the excitement around the release of the Simpson Bowles plan. And I, for one, was very disappointed that some version of that and some version of the work that the Gang of 5.5 or wherever it is was not taken up by the administration, built on either right after the plan came out or in the State of the Union or in the budget. And I think that there are probably 3 strands of explaining why that hasn't happened that I'd like to bring together here. And I did not think after David's column this morning that I could out-pessimist him, but I might be able to do that because I think there's 3 factors that are getting in the way. And I do want to say about, I'm ambivalent about the use of the debt ceiling because we do need guns at the head to focus the mind. I've heard Senator Warner talk about the debt ceiling as a sort of blazing saddles moment of the Republicans threatening to just shoot themselves in the head if they don't get what they want. And that's true, but Washington only works by crisis. And so I would like to see the debt ceiling used as a way to at least achieve something. But the 3 strands that I think we've talked about, Senator Warner talked about actually how it's un-American that the British are doing a better job than we are at achieving change. But I actually think it is quintessentially American because we have a government that is deliberately structured not to be particularly effective, which makes David happier than it makes me. And so we have both the problem of 60 votes in the Senate to get anything done there, which actually you could imagine the senators achieving a solution there and cobbling together a 60-vote majority. And then you have the problem of an entirely, completely, unprecedentedly polarized House, which it's awfully hard to see, absent a political groundswell to get them to be at least quasi-reasonable, hard to see how even a deal that passed the Senate could get past the House, which gets me to my second strand, which is after political structure, ideological dogma. When you've got the Norquistization of the Republican Party, and as frustrated as I am with Democrats who howl and howl and howl about not touching entitlements, I think there is much more of a willingness to acknowledge some need to do something with entitlements at some point and among the majority, or at least a reasonable plurality of the Democratic Party, than there is an acknowledgement, at least publicly, and I'm looking at you, Finn Weber, to talk about the need for new revenue on the part of Republicans, which gets to the third point, which is knowledge. I think there is an innate understanding among the public that we cannot keep on operating with the deficit and piling on the debt that we have, but no one has been willing in either party to come to them and explain what exactly it's going to take to achieve that. And so they're with the theory, they're just not with the practice, and that's that public knowledge, which is part of what the Committee for Responsible Federal Budget is trying to achieve, is going to be essential. And
What
that
would happen, Ruth, if they went to the public like Mayor Voinovich did back in the day and said, you know what, we got to do this?
I think it would take sustained, intense, I think presidential level explanation, repeated. And I think the public, voters are not dumb. They understand the concept of a household budget. But they are absolutely convinced right now that you can get the budget in balance without touching Medicare and Social Security. Also that you can get the budget in balance without raising taxes. And many of them are convinced of both simultaneously. And that's simply not true. And when they've got politicians coming to them and saying, oh, well, we're going to just hold spending to 18% of GDP, and we're going to either not raise your taxes or cut your taxes a substantial amount, it's no surprise and it's no blemish on them that they're completely, entirely befuddled about what it really takes.
Ambassador Jim Glassman, I don't know exactly where you want to go with this, but nobody's turned to the American people who have asked for more services, I'm not mistaken. And that's why they get more services and say, yeah, great, you got to pay for it. Don't we keep lopping things on and saying we can do this for nothing?
Well, actually, Steve, I'd rather not respond to that because I want to talk about something completely different. David talks about this is what David would probably say. There's too much democracy, as we just heard. I think there's actually too little accountability. One of the reasons that the British can do this, can do what they're doing, and we can't, is it's very clear that there's only one party in charge. Here, it's very hard to figure out whom to blame. But actually, that's not what I want to talk about. I would actually like to try to shift this entire discussion, if I could. I think, look, the debt's important, the debt ceiling's important, balancing the budget is important, but what's the end of economic policy? What are we trying to do? What we're trying to do is really what Senator Voinovich was talking about. We're trying to make a better life for our children, just as our parents made a better life for us. What we're trying to do is achieve prosperity. That's the end of economic policy. Let's call it prosperity through opportunity. That is to say, the people who work hard to support their families can make a good living, they can save, they can build wealth. This is under threat right now. But to me, anyway, the way you get to prosperity is through economic growth. And there are many ways to get to economic growth, and certainly an onerous debt and high interest rates and all the rest that come from too much spending, that's a drag on economic growth. But there are many other ways to get to economic growth. And now I'm actually having dinner with Grover Norquist tonight.
Tell him he's a verb.
No, this whole business of Norquistization, there are people who sincerely believe, who actually sincerely believe that tax policy that encourages growth will actually reduce the deficit, reduce the debt, and produce prosperity. I mean, there are just differences of opinion. But what I'd like to do to refocus the conversation is get it toward growth, which doesn't mean you don't cut spending. In fact, that's one of the best ways to produce growth. There are many other ways. One of them is a more sensible tax policy. Another way is a more sensible immigration policy. Another way is better education. Perhaps more investment by the government in basic research. There are many better free trade. There are many ways to do it, but ultimately the answer, I believe anyway, is growth. Chairman Bernanke said We can't reasonably expect to grow our way out of our current problem. I have to say, I like the chairman quite a bit, but I think he's wrong. I think that's the only way we're going to get out of our current problem. What Larry Lindsay said works the opposite way. We're not going to, right now, the Congressional Budget Office projects 2.5% growth going forward. That's a full percentage point lower than the average since World War II. That's terrible. That is not going to produce a better life for our children. What's going to produce a better life for our children is 4% growth. And as Larry shows what happens if you don't grow at what's projected. If you grow better than what's projected, you do a lot better. So this is kind of aspirational and it's optimistic, but I actually think we can do it if we shift the conversation toward growth and away from what's battering us down and making us feel pretty bad that we're just terrible people. I think we can do it.
Robert Reischauer and then Eugene Sterling.
That optimistic statement was the most discouraging thing I've heard all day. Not that I disagree with the direction of the effect of anything the ambassador said. Not that I disagree with the idea that growth is very important, but growth is generated by expansion of the labor force, which is projected to grow very slowly, an improvement in human capital, which involves education and training, which occurs only very gradually, and we know where our output is in terms of elementary and secondary education and even higher education. Innovation, which we do a pretty good job of, although once we create the new device, it's made in China or Thailand or somewhere else. And investment, which we've been doing a bad job of because we have a low savings rate, and here we have a big deficit, and we're wanting to pay down the debt that we have or reduce the growth of that debt. So while I agree with the prescription, if we did it, we might see a couple of tenths of a percentage point added to our underlying 2.5% growth rate 7, 8, 9 years from now. So if that's the solution to the problem, we have no solution. You know, and we can't be Palenti and say, well, let's go 5%. Brazil did it without asking, how did Brazil do it? You know, where are the millions of peasant farmers who are coming into the city and augmenting our labor supply? Where's the foreign capital pouring in? Where is the new oil discoveries and the other things that have driven Brazilian growth? And you know, while we have too much regulation, it pales to what Brazil had and began to get rid of. So the consequences, you know, just aren't the same. We can't compare China, Brazil, Vietnam's growth to that of a mature, high-level economy like our own with a very low-growing labor force. We're going to have to bite the bullet, and I'm a Brooksite. You know, I think the American people are totally disengaged in this. You know, while Bowles Simpson was an electric moment for those in the geek community, you know, I'm sure if you went beyond the Beltway and said, you know, what do you remember about this? It will be Senator Simpson's humor and some of his jokes. It won't be the substance or any agreement to the substance. I think there is really no substitute for either a crisis or leadership like we have never seen before. And leadership, I mean presidential involvement. I mean the president getting on television and saying, this is the nature of the problem we face. Let's not, you know, point fingers and blame this person or that group. These are the risks ahead of us. These are the consequences if we fail. And couch that in terms of your children, your grandchildren, and the future of America. But of course, the first reaction, were he to do that now, is, well, what's your plan? And he has been reluctant to have a plan, and maybe he's waiting for the debate to gel a little more and hopefully at that point leap out. If he does, and this occurs between now and August 2nd, I am with Barry. I don't think there's a prayer in the world that the legislative language could be written. I mean, first we need a budget resolution with reconciliation instructions in it, then it would go to committees, then to the floor, then there'd be a conference committee. You know, we are in, you know, glacial pace on Capitol Hill when they think they're at warp speed. This would take, you know, well into the fall to do. So we would have to have a temporary increase, actually not temporary, a permanent raise for a short period of time. The last thing you want is a temporary increase where when you've increased the debt ceiling, then it would fall back at the end of a period, because the Wall Street would really get nervous about that, because we would have to pay off debt. Then hope that the trust that exists will last through this period, through October, when a package could be put on the floor and voted on.
Folks, about 15 minutes till Gene Sperling comes from the National Economic Council, so we'll try to get everybody who's up, if not before, then after. Eugene Sterling from the Urban Institute Tax Policy Center.
I'd like to tackle this issue about the public and the public engagement. There's never been a time in our history when you operate on what I call the takeaway side of the budget, which are the tax increases and the spending cuts you have to engage to balance the budget, that's been popular. No politician has ever won office off of what they're going to take away from people. And so I think it's a mistake to frame that part of the debate as how we're going to make this popular with the public. Basically, there's something we have to do. We have to do it because it's economically necessary. And so then the question is, how do you reframe the debate so you can minimize these political losses, not capture some great gain? And there are several ways you do it. Senator Simpson, you may remember when I testified before the commission, I was told this made a difference. I argued, look, if you're going to do anything, the press is going to have the same headlines as soon as you identify any losers. So do something big. You may as well go for something big. And I think in some sense that's what you decided to do on the tax expenditures. That's one way. The other way, another trick is, of course, you have to make the pain of not doing something greater than the pain of doing something. So yes, the pain of enacting deficit reduction is going to hurt, but you have to do it in a way, such as when the markets collapse, you do it in a way that the politician says, but if I don't act, I'm in worse shape. I suffer even worse. So it doesn't mean that it's popular, it's just worse. And then the other thing that I actually do see missing, and it's partly because of the lack of presidential leadership, is there are ways of reframing the numbers in the debate so you retell the story. So for instance, you start reporting on deficits as something like taxes on future generations. You don't let things like spending increases and tax cuts act like they're free money, they're money that grows on trees. So we only show tables and distributions that end up saying, gee, if I give money away, I'm giving it away, as opposed to saying that somebody always pays for it. I think there are ways of reframing the debate so that actually you minimize these political losses, but I really discourage people from trying to think that somehow or another we're going to make this popular with the public. It's going to be more popular than the alternatives that we're facing economically.
Thank you. My good friend Larry Lindsay's asked for a minute.
Thanks.
So, he's
good
never
friend,
let me down before.
My good friend Ruth Marcus, I wasn't going to say this, but she's provoked me into revealing a truth that no one wants to admit. The Republicans already have caved on taxes, and it's in the Simpson baseline. A baseline is maybe what's actually happening. What the baseline is in the Bowles-Simpson budget includes a $700 billion tax increase already. Now, Republicans went because they're moving to basically enact tax increases on the rich, and they call that the new baseline, not reality. So when you say, Steve, 3-to-1, the 1 has already been given by the Republicans. The 0 option is actually a 3-to-1 deal. And the problem is that the Republicans tried to, sneak past Grover and get that thing done. It's not going to work. Republicans have given, the Democrats have given nothing when it comes to the 3, but the Republicans have given the 1.
Do you support the 1?
I think revenues are essential. I do. And I think there's ways of doing it that aren't anti-growth. I think most Republicans will. What will happen, though, is, again, no Senate budget resolution this year, no House or Senate budget resolution last year, a president who insulted the people who did produce the budget this year, a president and 47 Democrats who, in 2006, voted against raising the debt ceiling. You know, it's pretty hard after a while to say that, you know, somebody out there is credible that you're negotiating with. And I think that's the problem. The fact is the Republicans have already given on taxes in the baseline.
Can I just respond to that? It take 10 seconds.
I think you are.
Three Republicans caved on taxes, as you say. I wouldn't call it caved. 3 Republican senators, 3 Republican House members disagreed and didn't vote for Simpson Bowles. So I don't see the caving, and both the Senate Minority Leader and the Speaker of the House have said taxes are absolutely, positively, no way, ever, ever, ever on the table. So I don't see the caving.
If I can interrupt for 10 seconds, Ruth, that's not technically true. Paul Ryan said that he voted, and the House Republicans voted against the deal because it didn't include health care spending cuts. They were careful not to say that they didn't vote, that they voted against it
He
because
just said
of taxes.
right here, it depends on what the package is. I mean, I thought that was relatively open-minded.
And there's no alternative package.
To say that Republicans as a general, I really admire Congressman Ryan, and I take your point, Vin. That's not the reason they voted against it, but they also didn't vote for it. And 3 Republican senators do not constitute a cave.
Norm Ornstein.
I want to address that part too, but along with some other things. You know, David's point about the public not caring is true on almost every issue at almost every time. And when we tend to act on these things is when we can find a bipartisan leadership consensus. That's Pat Moynihan's long-standing dictum, and I think it remains generally true. One problem we have is that the last time we had that bipartisan leadership consensus was the TARP vote, the second time around. And that burned enough politicians. We had that vote partly because of the courage of Bob Bennett, and we know what happened to Bob Bennett, of Bob Inglis, and we know what happened to Bob Inglis. And the votes for TARP were critical elements of that. That means finding a bipartisan leadership consensus is tougher now, and it's tougher in part because I've been in this town since before your bar mitzvah, Steve. And I would say flatly—
I didn't get the year you were born.
1948.
Okay, thank you.
But I came here in 1969, and I would say flatly that I've never seen our politics this dysfunctional. They were plenty dysfunctional when we couldn't get the votes for TARP the first time. They were much more functional then than they are now. And we do have a problem with the public, which is they are engaged whenever you talk about doing anything to Social Security or Medicare. And when it comes to understanding what's in the budget, where we have a public that believes that 25% of the budget is foreign aid, and we should cut it to 10%. I tell my friends in the foreign aid community, you should pop up and say, we'll go even further, we'll cut it to 5%. Now, I want to get back to the
Give us the real number.
That's right. Yeah.
2, right?
It's 1. It's
sorry.
1%. Yeah. Now, 0.7%. You know, we talk with great praise of the Gang of 5 or 6, and I give that as well. But we did have a bipartisan plan out there. I will give great credit. I don't want Al Simpson's head to grow even more. He's already too tall. I would point out for the record that I appointed him or picked him to co-chair a commission and set the table for that some years before that. But the fact is, if those 3 House Republicans had voted for that commission plan, it would have been an action forcing mechanism. We would have had a plan like the Gang of 6 on the table for discussion. So the failure to do so, whether it was because of taxes or health care spending on the table or not, was an enormous disappointment to me, equaled by the disappointment of the president not standing up at the State of the Union message and saying, we have a good plan, let's put it into legislative language and act on it, and we would have had at least an opportunity to get people on the record. And now it is clear to me that what we need, and it has been for months, is the Ross Perot moment by Barack Obama. That's going on television with handmade charts and explaining what the problem is and what's in the budget and educating the public, and then taking a plan and creating some movement towards action. And let me just finally say, it is absolutely true that, that we have issues of trust with the two parties. But let's keep in mind that when the Affordable Care Act was put on the table, what we had was a year of relentless discussion of it as cutting Medicare to the bone and taking the elderly and forcing them out onto the street, and a plan that with its exchanges was a giant step towards socialism. Now we have $500 billion in Medicare cuts on the table by the same people who said those things, and we have exchanges that Paul Ryan said are identical to the ones in the Affordable Care Act. You know, we've had rhetoric that has careened out of control here that, well, he did say that.
But they aren't the same. The exchanges are not the same. It's an individual choice in the Ryan budget, and it is not federally regulated.
It is certainly federally regulated.
Getting complaints from the crowd. Let me bring in Maya McGinnis, who can give us a few words of sanity here.
Thanks, if this is one of the working mics. I just wanted to take a moment to kind of pull together a bunch of the comments that we've heard. And I sort of think that Paul Ryan started us off on that really important point that we have to get things that are specific on the table. And one of the more encouraging things is that that has happened with more and more regularity over the past year. We now have a multitude of plans that are out there that are getting more specific. And I think the words we heard from the senators about bipartisanship, obviously critically important. And I think all of this really was a game changer when the Fiscal Commission came out with its work product. And I think the work of the Fiscal Commission, and I think the follow-up with the Gang of Six, is the model for how we move forward. And so the problem that I see right now is that the clock is ticking, and we'll hear about this shortly from Jean, who just walked in. But the focus has shifted from the large, comprehensive, multi-year budget plan to what we do about the debt ceiling. And I think there are a lot of risks here. I actually voted that I think we will lift the debt ceiling before August 2nd, because somewhere else I voted that we would lift it after, and I figure I might as well hedge my bets here, since I can't figure out how to make money if we have a fiscal crisis. At least I'm hedged on whether we'd have one. But we're not going to have the big comprehensive plan as part of the debt ceiling fix, in all likelihood. What we're probably going to have is something that deals with the low-hanging fruit, as much of it as we can get done. It will probably be a reasonably large headline number, you know, $1 trillion, $2 trillion, I don't know. You can do a lot with baselines, as we've already talked about. And some kind of budget mechanism, perhaps something like what Peterson Pugh put out there of debt targets and triggers. And that's all good. Nobody would say $1 trillion in savings isn't important. But I think there are two big risks there. And one is, and I think it's great that we have a lot of folks from financial markets here, but more and more as I'm talking to people in markets, they're saying it's not the headline number that's going to matter. It's going to matter whether entitlements are part of this, because that's what's going to show whether there's the political will to do something real. And the second point is if we go into the election not having resolved any of this, you can call it the opportunity for mandate for how to go forward, but it's going to be an opportunity for all of these tough issues to become really, really toxic. And so I think in all likelihood on the debt ceiling increase, it's going to be very hard to get fundamental entitlement reforms or real tax reform as part of the deal. And so I think we have a big risk that things become much harder if we move this to after the election. Just one quick point on economic growth, because I'm really glad that Chairman Bernanke brought it up and James Glassman brought it up. I actually think there's a lot of room for compromise on how you look at fiscal consolidation beyond just getting the numbers to add up. We know we have to save trillions of dollars over a decade, but you want to do it in a way that's smart to the economy. And I think both sides, right and left, have really important points here. One on the left is that you don't want to decimate the part of the budget that's public investment. We really want to find a way to shift from a consumption-oriented budget to an investment-oriented budget. And on the right, of course, doing tax reform in a way that's smart rather than stupid is going to be conducive to economic growth. But what I would warn against and what concerns me is if we start building that into our assumptions about savings. We should let any growth be kind of the icing on the cake and have that be the extra bonus that we have for fiscal consolidation. So I think the big challenge going forward is, one, how are we going to do this? How are we going to get this done? But two, we should talk about fiscal consolidation that works to grow the economy, but not as a way that replaces the need to make the tougher choices.
Diane, you wanted to say a few words.
Just a quick echoing of some of the statements that have already been made, and one of them is For me to sit here in the private sector and to be a part of this panel, and Steve, and to talk of the need for the private sector to rise to this, took enormous courage. And I have many colleagues who will not sit around this table because of the partisanship that's happened in Washington, will not step up to the plate, and will not talk about these issues, even in a bipartisan or nonpartisan way, which I think is really important to take into account at this stage of the game. And it echoes some of the things that David Brooks brought up about the societal effects and sociology of what we're dealing with today. We have clients in my own firm that go from one end of the political spectrum, pension funds, union pension funds, to the other end, institutional investors, hedge funds, and very wealthy individuals that are very conservative. And so to be here and to have the private sector involved in this debate, I think, is critical. But I also think it's a consequence that there's not more of us here because of the political rhetoric we're now hearing from Washington. And I just wanted to underscore that point, because you did really make the point, Steve, of saying how important it was, and also how important it was to the business community. And we've yet to hear from someone I've known for a long time, Governor of Michigan, former Governor of Michigan, Governor Engler, of the financial service, of the Business Roundtable, which is key to this issue as well.
Then just to say a quick word from your economics about the importance of growth and how that changes the deficit outlook.
You know, well, that is one of the most interesting things. Is one of the things we found out in the 1990s, and it was really only not anywhere near what our situation is today, is that as the deficit gets smaller, we do get more private sector investment, almost to an extreme we had in the 1990s with the tech bubble. And I certainly do believe that we can think very thoughtfully. I agree very much with Maya's comments about how we structure deficit reduction to encourage maybe those few extra tenths that Bob talked about earlier down the road, because reforming tax policy is critical. And I think a lot of us, Larry and I, would agree on a lot of things we might not agree on otherwise, on tax reforms in terms of encouraging growth. The business community would agree on that, and the American public could agree on it given the right framework. The same thing with the structure of spending cuts. And I think that's where all our hearts are, and it gets beyond these ideological and political debates into the economics and the heart of the matter, and that is building a more sustainable, long-term, fundamental economy.
One-word answer here. Given the right policies, what's your potential growth number?
Given the right policies. Yeah, my current potential growth number is about the same as Larry's, 2.5. I think we could get it up to 3%.
Okay. It's a great segue into Gene Sperling, the Director of the National Economic Council. Gene?
Thank you, and I'm sorry I could not be here at my initial time, but we were and I don't know if it's meeting 6 or 7 of the Biden group, and it won't surprise you to know that I'm not going to reveal too much or negotiate here, but I will say the following. It is a very serious process. There is a real seriousness of purpose in the room. Everybody at that table it takes it very seriously, comes very well prepared, and goes line by line through the details. And so the talks are they're tough, but they're positive, and progress continues to be made. Let me just make a few general points. Number one, we should be engaged in this process of seeking a bipartisan down payment on deficit reduction, regardless of whether or not there was a debt limit issue. It is important for us to show the American public and broader markets that despite our deep divisions in Washington, we are capable of coming together to make progress on getting our fiscal house in order and showing that we can live within our means. And I think that that would be a very positive development. The progress in the 90s was not made all in one swoop. It was a combination of the 1990 budget agreement, the 93 budget agreement, 1997, and I think the commitment to save surpluses for Social Security. So making a serious down payment, making important progress matters and would send a very important signal. So we should be doing this regardless of whether or not there was a debt limit issue. That said, nobody should use the default of the United States as a threat or tactic for their budget agenda, no matter how admirable or worthy that agenda is. No one should ever use the first default of the United States, with our legacy starting with Alexander Hamilton, as a acceptable form of a political or negotiating tactic. Again, no matter how worthy their ultimate objective is. Second, the president, our strategy this year was to get through the first initial budget, and then as soon as that was over, to come forward and try to get a bipartisan negotiation going forward. Getting that first part done took much longer than we would have liked, or many people would have liked. But that was done on a Friday night, and on the next Wednesday, the president put forward a 12-year plan to get to $4 trillion in deficit reduction. That plan was very detailed in some aspects, and such as the deficit cap, what we were doing on health care spending in the out years through our mechanism. And in other places, we just made clear that we were willing to hit important targets in Medicare and Medicaid, in other mandatories, and I think and in revenues, and I think it sent an important signal that we were willing to look at all of the major budget categories as part of a comprehensive deficit reduction plan. We did say, and we do believe, that Social Security should be dealt with in its own right, and it should not be looked at as a means for dealing with a 5 or 10-year deficit problem. But but the president, as he always has, encouraged a serious bipartisan negotiation and compromise on continuing this as the rock-solid and solvent benefit for future generations, as it has been for past generations. As I think you're just saying here, we're not apologetic about the fact that for us, a deficit reduction plan is not a means and an end, but is a component of a strategy to grow our economy in a way consistent with our values, which is to have a growing middle class in which success in our economy is not based on the accident of your birth, but your ability to climb and the ability of a very multi-ethnic society to rise and be part of a growing middle class without pushing anyone out. That's the ultimate goal, and we believe that a strong deficit reduction plan is a critical component of that strategy. But it is also important to ensure that we are investing in the future, and it's also critical that we do so in a way consistent with encouraging a strong recovery at this point. Those are parts of a strategy that not only can go together, they should go together. And let me make one point on the investment part. I've heard for over 20, 25 years the discussions by so many of the people around this table as to why we as a country wanted to have a strategy to deal with the baby boom retirement. And truthfully, we were in a position when I left at the Clinton, my last year at the Clinton administration, where we were on track to deal with the retirement of the baby boom generation in a way that was not going to pass on significant debt to the next generation. I won't go into how we lost our way, but I will say the following. Part of the goal and purpose of that was to ensure that the strains of an older, a more aging society did not prevent us from investing in our children, in research, in innovation, the things that have helped make our country great. So the notion that as part of the strategy, it fits well to cut those parts of domestic spending that are fundamentally about investing in the productivity and innovation and research of the future, to me counters much of the fundamental goal in us being able to get our fiscal house in order. Part of the goal
was to ensure we did not starve the investment in our children in education, in research and innovation. So to say that it doesn't matter, or that it's actually a positive thing to be cutting those parts of our budget to levels that we have never seen on record, or not since the 40s or 30s, should not be part of our strategy. And in fact, one of the things that we need is for people to make clear that not all spending is the same, and to make the tough choices about those things that are critical to giving people opportunity, to ensuring that children's chances in life are not overdetermined by the accident of their birth, and to make sure we are still investing in the basic research and innovation that has helped us lead the world for generations to come. The issue, I will say that there's no question that one of the most difficult aspects right now is whether or not, when we're looking at a comprehensive deficit reduction, revenues can even be a piece on the table. I want to point out that that is the norm for a serious bipartisan budget agreement. It was what happened in 1982, 1983 on Social Security. 1986, even the tax reform was revenue neutral, but raised taxes on some, lowered on others. 1990, 1993, and in 1997, even though there were not new revenues there was an agreement to continue the recent revenues from 90 to 97. Prime Minister Cameron has, in his very serious, some feel too far, budget cutting in the UK, includes $1 of revenues for every $2 of spending cuts, or about $3 in spending cuts for every $1 of revenue if you count interest savings. The reason this is important is for three reasons. One, it is just very hard for the numbers to work without revenues. I think some of the most unfortunate parts of the House budget agreement, the House budget plan, were driven by the fact that without revenues, they were forced to cut far too harshly in some areas, particularly affecting the least fortunate and the most vulnerable. Secondly, but beyond the numbers not working out, for those of us who've been involved in major deficit reduction plans, we know the following. It is never popular. It succeeds because it's kind of equally painful for everyone in a way people think is fair. That sense of fair sacrifice is how those who vote for budget agreements get the moral authority to ask for sacrifice across the board. We are a Democratic administration, and in our framework, we have put over $100 billion in Medicaid savings. We hope with our flexibility that will not impact people too harsh. But the fact is, we are essentially asking everyone to be part of the sacrifice. One loses their authority to ask that sacrifice of everyone if at the same time those who are being asked to take a pinch or to sacrifice in the short term for our long-term benefit feel that their sacrifice could have easily been avoided if it had not been for tax relief to the most fortunate. So it's not just about the numbers working out. It is being able to tell everyone that everyone has to sacrifice. And if, again, you can suggest that all of your sacrifice would have been unnecessary had it not been for extending tax relief for the most fortunate, it makes the tough and difficult choices that elected officials have to ask of their constituents more difficult to do. And finally, you need the sense of shared political sacrifice, the sense that when people go back to their groups that support them, to the people on their side, and explain why they did some very difficult things, they can say it was mutual, that everybody held hands and did difficult things together that they could not have done alone, that people compromised on long-standing positions, not because they wanted to, but because it was the only way you could get divided government to work together to do something larger and better for the American people. It is very difficult, to do that if a huge component, such as revenue, is completely taken off the table. So my last point, and then I'll stop, is just to say, however we work this out, our sense of shared sacrifice should not be that if the toughest choices become too difficult, we default to asking those who are most unfortunate, are poor, are those with the least economic and political power to take the overwhelming bulk of the sacrifice. And I ask that those who, and I suggest that it should be acceptable in our dialogue for those of us to suggest how the tyranny of the numbers can cost millions of people their health care without being accused of being political. If one looks at the Medicaid savings being asked, $770 billion in the House Republican plan, 35% savings in 2021, off the projection, 5%. By 2029, nearly half. 2/3 of the savings of those funds go to people in nursing homes or to families with serious disabilities. 2/3. If you wanted to, if it is almost unimaginable that you can have that degree of savings without significant reduction in health care to those in nursing homes or those with families with disabilities, unless you were to take it all from the other third, which is 40 million or more poor children. To suggest that is to just suggest, is there a way, do the tyranny of the numbers on the math, does the tyranny of the math allow for another outcome? To raise that issue should not be off the table or considered demagogic. There must be a way that we can have a discussion about what the impact on people is. I have not used any phrases. I have not used any political jargon. I'm just suggesting why the numbers in that particular area worry me deeply from a policy and a values perspective. Thank you.
And thank you, Gene. Just before you came in, it was suggested that in the 3-to-1 ratio, the Republicans have given their one, the expiration of the Bush tax cuts. The Democrats have given nothing. You respond to that.
I'm sorry, what is the one that they've given?
The expiration of the Bush tax cuts, if that's already a given on the table.
I have not gotten that email yet. I have not gotten that Twitter. I have not gotten that phone call. But that would be.
For the children. Gene actually did. It was in the baseline in the commission's report. All there. It's all there. It's right there. I know the president didn't accept the report when they took it over.
Particular attention. We took particular attention to take care of the disadvantaged, the poor, the children, the veterans. It's all in there. And here we are at the same point. I like Gene. He's a great guy. But I tell you, if this goes right back to that, we will never make anything. Read the damn report. I know one thing, and I'll share it with you.
Senator, I didn't comment one word about the Bowles-Simpson plan, and if I had, I would have done so in a complimentary way that yours represented the type of balanced plan, whether you agreed with all the details or not, that we should be aspiring to.
I have sat here and I'm fascinated. Erskine and I will speak tonight. I don't know if this thing is on. Everything you've spoken about the disadvantaged, the vulnerable, the people on Social Security who are out of work, who are out of gas, who can't work. We particularly sincerely directed our remarks to that. And when the commission report was given with a vote of 5 Republicans, 5 Democrats, and 1 independent, nothing came from the president. Nothing. And that's, I'm not talking about specifics or anything else. I care for you, you're a great guy, and you're a hell of a spokesman. But let me tell you, that goes right back to the same stuff, and then the Republicans will come in and say, yeah, but here, there they go again. I can only tell you, if you torture statistics long enough, eventually they'll confess. And if you're going into that game about 3-to-1 or 4-to-1 or 10-to-1, We'll never get there, but I can tell you that we had not a single witness came before us that said that we would get out of this with even double-digit growth for 2 decades. We would not get out of this hole. Not one single witness challenged that. We sat there for a year. Around here, I was here for 18 years, and I couldn't believe what we have now in the situation of cleverest possible ways to stick it to each other.
Senator, can we leave it there and let
Yes, I think I will. But anyway,
Director Sperling
this thing
respond?
isn't going away. It doesn't matter where it goes. They can't avoid the commission report. You can't avoid it.
Gene?
And forget whose credit it is. You can't avoid it.
Okay, well, Senator, in all fairness, I didn't mention Medicare in my remarks. I said that we needed to all come together. I said what I thought the conditions were for bipartisan compromise, that we all had to be able to move off. I suggested why the position that you have not taken, or your commission did not take, that you could not have a penny of revenues, was harmful to both the sense of shared sacrifice and the numbers adding up, and the political shared sacrifice that you would need to get a more significant deficit reduction bill. All I mentioned was one program, Medicaid. It is not a program that is often, I don't mention it because there's political advantage to it. I mention it because the reason I came into public service, Senator, was that I could use my privileges to defend those who had less privilege. These are the poor children in our country. These are the people that, and all I said, Senator, I didn't say anything about your plan. All I said was on that plan that I hoped we didn't go there.
You think I don't care as much?
Senator, I didn't say that.
Now, this is completely unfair that Gene should be put in a position of defending himself in this way. And this is one of the problems of elites in the budget cycle who want to have these kinds of discussions, but when someone actually says, here's what might be going on, it's like, well, we can't, you're not saying it the right way. Gene is the only one in this room who's in the meetings. He's the only one in this room who's actually been involved in negotiating these kinds of deals, who's currently in government. And I think it's unfair to be taking shots like that. If you disagree with him, just say you disagree with him. But I don't think it's necessary to say
I just don't know.
All right, Senator Simpson, I'm going to ask you to just let Gene, who was kind enough to join us here today. Gene, I want to give you a couple minutes to finish your remarks uninterrupted. Let's do it that way, and then let's wrap up with the closing comments of those who would like to make. It was terrific etiquette the whole time, and we can.
I'm sorry that my arrival changed it, but I did not use any phrases, and I do think that we should be able to have those discussions about what the impact is. I believe very much in bipartisanship. I believe very much that we have to compromise as a country. I am in budget negotiations with people who I disagree with, like Senator Kyle and Congressman Eric Cantor, but they come to the table every day with a sense of seriousness, very well prepared, and we are trying very, very hard to find enough agreement so that we can make progress. And again, I think that is very important. We do have disagreements. I don't think that expressing those in a civil way or talking about the potential impact. Again, I mentioned one aspect that I think I mentioned because it doesn't get much political coverage, and it's not considered as political of an issue, but it's something I'm worried about. And I compliment the Bowles-Simpson plan in that I think that it did a very good job of trying to ensure that whether you agreed with all the aspects or not, there was shared sacrifice and that there was not a sense of putting a disproportionate amount on those who have low income. And I want to say again, I believe that we as a country, people have to be willing to move off their dime, move off their hard and fast positions, us included, But you have to do so together, and there has to be a sense of mutual compromise and mutual shared sacrifice, and that was the main point I was trying to bring. We will have differences, and I think if they can be expressed in a civil way, that's all the better. But I'm not going to forego the ability to say where I'm deeply concerned when things are going to hurt those that I think are less fortunate. Nor, in saying that, do I mean to impugn the motives or the intent of anybody who might be on a different position. I think, for example, that going back to my initial point, I think there are things that were in the House Republican budget that were there because they had no choice, because they had decided there were no revenues. And so they were forced, again, by the tyranny of the numbers, to go deeper in areas that my guess is many of them would have preferred to. But I stay with my caveat, which apparently got me in trouble here, which is not that we should avoid the hard choices on revenues or Medicare or anything else, but again, that as we do that, we do not put a disproportionately negative impact on those who have the least economic and political power.
Thank you, Gene. And I thought I had it rough arguing on CNBC, not even close. Let me, we're just going to go right to left here. We have about 10 minutes left. Mr. Stern.
So usually I'm not on the right to left.
Oh, sorry,
side.
to you.
Usually on the left to right side.
A different framing issue than David Brooks. There's two crises that are both appropriate that people are trying to solve. There's a fiscal crisis that's real, it's devastating if we don't deal with, and that's what a lot of us spend a lot of our time on. And then there's a life crisis that most other people in America are trying to solve because their home, their job, paying for their kids' college is out of control. And what we have then is a big debate pulling people in both directions, where some people are saying, in the middle of my life crisis, how in the world can you deal with cutting my Medicare, my Social Security, my programs for kids? And at the market crisis, you say, we're going to have to do those things, because if not, you're going to have a much worse problem. So I just don't think David's framework is right. I think people are dealing with two very logical competing interests, as they do with immigration and other things, and they get pulled apart, which is why bipartisanship becomes important, because someone has to try to bring those two things together, because once we pull people apart, they just go back and forth, as we all do in this room. I just want to make 5 points I think that we need to think about. What is just on the question of shared sacrifice? The reason the millionaire's tax polls so well and so highly is not because people even understand what the millionaire's tax does. It is shared sacrifice. And somehow people in this country think that some people got off the hook easier than others during this whole life crisis that they're having. And so shared sacrifice is important. And one of the things I want to say is one of my objections to the Bowles-Simpson Commission, I had only a few, was the fact that we didn't ask major corporations in this country, when we were sort of fixing the tax system and lowering rates, to pay a dime in shared sacrifice. I don't think that was right. I don't think it's right in the future. We should lower the rates. We should get rid of the exclusions, but everyone's going to have to pay. And all of a sudden, I think Peter Orszag is looking a lot smarter now when he's saying, let's let all the tax cuts expire, because I think that Democrats have to think about, do we really want to take away people's programs piece by piece, little by little, cut, or are there bigger things we can do, like letting all the tax cuts expire, that may just be an easier way to deal with some of these things by providing sort of more shared sacrifice in a much broader way? Two last points. One is the Democrats have no health care plan. I don't like Paul Ryan's plan. I think it's the wrong plan. I don't think it works for the market, but it works mathematically. And the Democrats have no mathematical plan that works. And I'm going to take the Barry Anderson plan, which he won't like me for saying this, but when he testified in front of the Fiscal Commission and talked about the fact that he lived in France, and France pays 6% less of GDP than the United States, as does every other major industrial nation in this world, pays 6% less GDP. We'd solve a lot of problems with 6% of GDP, but we can't have a discussion in this country about all payer, single payer, or any other health care plan that every major multinational corporation in the world lives with in every other country but ours, but somehow it's off the table to even have a discussion of how we could save 6% GDP in a proven way. And the last thing I say is Gene Sterling should be our master strategist, because the only answer to this question, the choice has to be better than the alternative. It's not good choices versus good choices. We saw that in the tax cut. It was better to have the Bush tax cuts for everyone, for the rich, continue because we also got something in return. And we have to set up a situation where what we're doing is better than the alternative, and unfortunately that's where crises come into play.
All right, I think we have to end this on time, so John Burbank, you get a minute.
Okay, sovereignty is about having choices, and we're doing a good job of avoiding pain so much that we're not going to have sovereignty, I'd say, as a country, if this goes on much longer. I had basically written off hard choices being made before 2012. I didn't think the political motivation was there, and it really isn't there if Bernanke provides enough liquidity to levitate asset prices. And I wish he were here to actually listen to this meeting. It matters a lot whether Bernanke actually acts again and does QE3. You see, if he does not do that, asset prices are going to fall. If asset prices fall, everybody's going to ask what's wrong and how are we going to fix this? And then the pressure is going to be back on Congress. Congress has actually had it pretty easy since Bernanke has had taken these actions, and you have to recognize the connection between these two things. You see, the markets right now pretty much assume QE3 is going to happen, and the question is when. And they're assuming it's going to happen way sooner because that is Bernanke's DNA. I mean, if he does not do that, and I think if he were responsible, he would let asset prices fall, and then pressure would shift to Congress. He's given a hall pass to him. There's one other problem with this, though, is that reflexively, energy and food prices are going to rise, and we're going to have a different problem, and we have no energy policy in this country, unfortunately.
Okay, Carlo Cottarelli.
Yeah, I look at this. I look at the United States from the point of view of the experience of other countries, and if I look at other countries that went through processes of fiscal consolidation, fiscal adjustment, I have a few lessons that is perhaps worth mentioning. I had more, but I don't have much time to go through all of them. So I will mention 2 or perhaps 3. First, the importance of growth. Growth is paramount in fiscal adjustment. For a country that has a debt to GDP ratio of 100% and manages to increase potential growth by 1%, after 10 years, the debt to GDP ratio is down to 70%, 30% below if you save all the additional revenues. But I fully agree with Maya when she says that when one cannot build a fiscal adjustment plan based on the expectation that growth will increase, because it will not be credible. So one has to be cautious, and then, if things go well, enjoy the benefits. Second point, this comes out very clearly for the experience of fiscal consolidation in other countries. You have to put everything on the table, but then you need to be selective, both on the revenue side and the spending side. I'm not taking views on how much should be on the spending side, on the revenue side, 3-to-1, 2-to-1, 4-to-1. But I know that both on the spending side and on the revenue side, there are good measures and bad measures. On the revenue side, reducing the so-called tax expenditure remains critical. On the spending side, again, there is good spending and there is bad spending. One has to avoid the mistake that has been made in some cases like Canada in the 1990s that followed initially an approach of cutting across the board, and then only when in 1994-95 they started having a selected approach, the fiscal adjustment program worked. So one has to be selective. And the last point I wanted to make, the last lesson, is perhaps a bit more worrisome. If we look at all these cases of fiscal adjustment in the past in other countries, we see that fiscal adjustment is implemented only after interest rates start increasing. And the challenge for the United States is to start implementing fiscal adjustment before you get the interest rate shocks, because the right time to do it is when the economy is not suffering from an increase in interest rates, but when interest rates are still sufficiently low.
Thank you. To use a military analogy, I think the debt ceiling issue is a live fire exercise, as we would say. It's not a drill. And to the extent that we can impress upon the American people that it is a live fire exercise, I think we've done a good day's work. Secondly, people, I don't think, are aware that this is not a situational deficit. This is a structural deficit. And it's going to have to go to the structure of the tax code and all the other things that have been talked about. Third thing I'd like to say very briefly is in 1962, there was a case from my district in Tennessee called Baker versus Carr, where the United States Supreme Court said for the first time in modern political history, that apportionment of congressional seats as well as state Senate and state House seats was a justiciable issue, and that it was a matter of due process. Well, they turned it over to the state legislatures, and it didn't take the people in office in those days long to figure out, this is a good deal. I'll give you all your guys, you give me all mine, we're both happy. Today, 49 years later, there are only 91 seats out of 435 in the House that are within the hypothetical margin of error of a 50-50 voting pattern, which means I was there from 1989 till January, and I saw the metamorphosis occur, which means the members who are coming there now are crippled politically because they are elected in the party primaries where the most partisan elements of society reside. They are understandably responsive to that, and they come crippled to come into what I, as a blue dog, would call the sensible center and work on solutions to our country's problems, because if they do, they are blasted by their voters for being ideologically untrue, impure, or whatever. And Ruth, I won't talking, you brought it up. But that is a problem. We're going to see it again this year in this gerrymandering that's going to occur, not for any public purpose, solely to benefit one political party or the other. It is a system that is broken, and we've had Blue Dogs had a bill for the last 4 Congress. It won't go anywhere. But we do have a House, Senate, and a sponsor and a Senate sponsor. Until you fix that, I don't know how the members can actually exercise their good judgment to go into the sensible center and solve something as an American first, not as a Democrat or Republican lawmaker. Thank you.
Thank you. Jim Glassman, $1.50, and TV means a minute 30.
Minute 30, you can time me. First, I want to associate myself with Gene Sperling's comments, and I'll quote him. Deficit reduction is not a means to an end, but a component in a growth strategy. And absolutely, it's a critical component. That's why I'm here. That's why I believe in Maya's work and the work of the Committee for a Responsible Federal Budget. But it is not the icing on the cake. It is the cake. And there's a virtuous circle, a virtuous cycle that can be established where, as we just heard, increased growth lowers the debt to GDP ratio, which lessens the headwinds and the constraints on growth, and on and on and on. So all I'm urging, and I just disagree with Bob Reischauer, I don't think we're talking about a couple of tenths of a percentage of growth. For one thing, we could change our immigration policy overnight, and it would have a huge effect on the development of human capital in this country. There are lots of things that we can do. I think this conference has been absolutely terrific, but I just hope that we don't lose sight of the context in which deficit reduction occurs.
Jim, I can't let you go. Give me a number. Give me a potential, right policies. What's the right potential growth number for the United States?
Well, I have to, it's an advertisement for my own institute, for President Bush's institute, where we just had a conference 2 months ago. Maya was there, Larry Lindsay was there, which was kicked off what we call the 4% project. Okay. Now, some people can consider 4% aspirational. Maybe Larry's right. Maybe it's 3. Maybe it's 3.5. But it's not 2.3. That's what the CBO is saying going forward, and it will be 2.3 if our policies don't change.
Michael Palm, 30 seconds.
Just to build on that point, so growth has been discussed as an important factor from the econ side. Inflation is another important factor, and one that many point to as a way out of this problem. Just inflate your way out of the debt problem and everything is solved. The problem with that is while nominal GDP goes up, as we saw in the first quarter, it doesn't mean much for real growth at all. So we disagree with that view that it's a good economic policy. Additionally, revenues may go up, but spending goes up along with it. Entitlement spending goes up, and other spending goes up. And so deficits don't actually improve under a high inflationary environment. So many are looking at inflation as an option of the way out. Inflation is just not an option.
Thank you very much. I want to thank the panelists and all the members of the roundtable. Thank Maya and the Center for a Responsible Federal Budget for bringing this group together. And it's been my pleasure to be here.
I'm just going to say a quick thank you, because I do want to thank all our panelists who are here and mention that it was a fascinating afternoon. It was a scrappy afternoon. It was a depressing afternoon. And I also thought it was encouraging. Every time I hear the members of the Gang of Six talk, I think about how the country really is ready to hear kind of the message of how we could move forward, and that I agree with Jean's point that it has to be shared sacrifice for this to move forward policy-wise and political-wise, and I think a deal has to be big enough to actually fix the problem. I do think the country is ready for that message. I think logistic-wise, many of you are probably ready for a drink. We have a reception across the way, so I invite you to continue the discussion. Jack Lew will be joining us there. Thank you.